So good morning, everyone. Welcome back to day 3. I think we had a very successful day yesterday, and certainly a number of people said to me afterwards how helpful they felt it had been having the colleagues from the valuation profession that had really moved the session forward. So thanks once again to them, and also to David and the task force and staff for how they've managed to basically help us move forward on some very complicated issues. So from one set of complicated issues, we move on to another set of complicated issues in terms of other lease type arrangements. And even just to add complication to the matter, João was unable to fly down yesterday. So we have João in Toronto now, sort of, kind of reflecting on various comments and in terms of how we get into some of the issues. I've sort of been talking to Lynn and staff about how we best handle today's session. So just with apologies in advance to members in terms of preparation, I'm going to suggest some slight reordering in terms of how we take the papers, just to sort of help walk us through the arguments, because it is tremendously complicated. I would, though, just like to sort of, before I hand over to Lynn, to say a few opening remarks as task force chair, just to thank João and the task force for the huge amount of work they've done on our behalf. I think this is really complicated, and I think you've really moved this issue forward extremely well. So thank you very much. I think it was Claudia, Abdullah, Andrew supporting Lynn. So thank you very, very much for the hard work you've put in. I think probably without further ado, Lynn, maybe I'll hand over to you. I don't know if we could get the slides up, because I think you've got an introductory slide, haven't you?
Yeah, I have. So I don't know who's doing the slides. If we can get the slides up, I've got them on my screen, but
yes,
doesn't really matter.
Ian, Lynn, I have the slides shared, and I'm going to share the screen.
Okay. Yeah. Okay. Thank you, João. Good morning.
So there we are. So we had 2 task force meetings during the last quarter, and Ian's already said what I wanted to say in terms of a big thanks to the task force members and to João for supporting us throughout this period. Just in terms of the order of the papers, we had quite a lot of debate around which order to try and take things in. And there are some important principles I'll come to in terms of that. I guess a couple of reminders, though, to start us off this morning. Firstly, we have got an approved leases standard, and so we analysed the transactions in accordance with those lease accounting models. We are not in the territory of reopening the accounting models. We are absolutely in the territory of taking a set of public sector specific transactions and looking at how to account for those in accordance with the model that we have already approved in IPSASB 43. So I'm sure during this morning's discussion, we will get a lot into kind of like the double entry and where things go, but that's in accordance with the accounting model, and we are not reopening the accounting model. The second point I wanted to make, and this was is covered in 6.2.1, but maybe not in a clarity that perhaps when you read it cold in the order that the papers have ended up in, you may not have grasped this. And our thinking is, how did we take this project forward when we have got ongoing projects around revenue and transfer expenses in particular. But actually, when we've looked at the set of transactions that we've looked at in the papers that you've got today, we are confident that we can take this project forward without needing to wait for the revenue and transfer expenses projects to complete. And maybe it wasn't clear enough in paper 6.2.1, but that was what we were trying to say in 6.2.1, which is how does it link to current literature if we proceed and are content with the accounting that we propose in the later papers, then 6.2.1 gives you the answer about how we can weave that into our current literature. So I think that's an important point for the board to not get concerned with, or maybe people do have comments that we will of course listen to, but our view as a task force is that we can proceed with this project without needing to wait for other ongoing projects to complete. The third point that I just wanted to make in terms of this morning's discussion, we have so we've got papers here around concessionary lease accounting, and I would say it was our second task force meeting where when we first started drafting the papers, we had included leases for zero consideration, but I think it was Claudia that pointed out to us that actually that doesn't meet the definition of a lease. So we tried to update the papers to reflect that, but perhaps we haven't got that absolutely nailed on. That said, the principles, we think in terms of the accounting, when you've got nominal consideration, are the same. So we do need to deal with the fact that the definition of a lease doesn't include zero consideration, but we don't think that the accounting will be different. So there might be a couple of places in the papers where we perhaps haven't got that fed in to the update that you've received absolutely right, but I don't think that should detract from the discussion around the principles for accounting for concessionary leases. And a couple of other points we've got on the slide. Obviously, we will be alert to the discussions and update the basis for conclusions when we've had a discussion at each IPSASB meeting. And we know we haven't looked at sale and leaseback transactions, and we will bring that back to the September meeting. We wanted to get the principles in the first place agreed if we can today, so that will then help us move forward on the other types of arrangements and also on sale and leaseback. Thanks, Ian.
Thanks very much, Lynn. I think that's really helpful. I think it shows how many different issues the task force has actually been grappling with in terms of moving through. So on that topic, in terms of sort of helping members through the material, the proposal in terms of the way that we will tackle these is that on reflection, probably to help members into the argument, we think it might be better to move into paper 6.2.3 first, which is the accounting from the lessee's point of view, so that we can all kind of get into what the proposals actually are. And then probably what we will do is move through 6.2.4 next, and then 6.2.5, and then go back to 6.2.2 and 6.2.1 as the final one. And obviously attached to 6.2.1 is a draft ED, and we may or may not get on to commenting on that depending on how we work our way through. The overriding point for that paper was the point that Lynn's already made, which is that we can, the task force is recommending that we can use the other forms of guidance, the existing guidance, rather than waiting for the new revenue and transfer expenses standards. So apologies for that just if you like, revision of the order, but it just in terms of responding to comments I've received, that seems to make more sense. So is everybody clear that that's the order in which we'll take things today? Okay, so with that, João, I'll hand over to you to introduce the slides on 6.2.3. Welcome from Toronto. It's good to see you, and look forward to the discussion.
Thank you, Ian, and good morning, everyone, and apologies for not being able to be there. Before jumping into the first technical item, I just want to ask from the board on the 3 standing agenda items on the project roadmap and decisions and instructions from the March meeting, if there are any comments that the board has, Ian. So with this, I'll pass over the floor to you. Thank you.
Okay, thanks, João. And I think that's a good reminder that the papers right up front are just important in terms of a reference point as to how we're moving through the materials. So were there any comments anybody wanted to make on how those have been taken forward? Okay, I think we're good with that. So João, move us on.
Okay, thank you. And also from staff, a big thank you for the task force for their support during these extensive meetings during the second quarter. It's really helpful to support the staff's work. And without further ado, I'll move on to the first agenda item, which is the concessionary leases, measurement and recognition for lessees. Staff and the task force had several discussions on this and on this topic, and our approach was to see what IPSAS literature has on this type of transactions, where we have non-exchange transactions being involved from the recipient side. So we all know that IPSAS 43 introduces a new type of asset, the so-called right of use asset for the lessee. And so as acquirer of this asset. And so what we did was, okay, let's go to IPSAS literature and see how the current IPSAS deal with these type of assets when they are acquired at the non-exchange transactions. So, doing that, what we notice that for transactions that are as a result of an exchange transaction, the measurement is at cost, and this is consistent with IPSAS 12, 16, 17, and 31. And that's what we currently have in IPSAS 43. So the cost is basically the present value of future lease payments. So the current guidance that we currently have in IPSAS 43 is very much consistent with our literature for those type of assets. So what we are now dealing in this phase of this project is, okay, and when do we have a non-exchange transaction, in this case concessionary lease, what should be the approach to be consistent with our current literature? So we also saw that, and what we identified is that for non-exchange transactions, the measurement basis is a fair value. And so, and that is the gap that is now in IPSAS 43, and we are pursuing to fill that gap with this second phase of the project. And that is our recommendation because it provides more information on operating and financial capacity, and of course enhances public financial management. Before moving forward, I would like to make a pause here, Ian, and to receive board's feedback. And with this, I pass the floor to you.
Yeah, thanks, João. I think that's a very good place to pause. So open up for comments from members, and firstly, just if there are any questions about what João has presented there in terms of just understanding, and then secondly, for comments on the recommendation to measure at fair value. So open for comments on either of those. Lindy, I think you're first, and then we'll have Todd.
Thank you very much. I don't disagree. I think it's just possibly how it has been set out in the papers and in the exposure draft. So I agree that the asset must be at fair value or market value. And I wonder if though we should actually use fair value because it was specifically excluded from the standard. And I don't want to go back into the whole debate around fair value, but in the standard already, we have guidance for a lessee when there are different, when there's a contract with different components and they have to the lessee has to identify the lease element of a contract, and it talks about you would look at the market value or the market price. So there's a deliberate not use of fair value when it comes to the lessee accounting, and I'm just thinking we should be consistent there, because if we're changing it now to using fair value, then I think we run a risk of something being different. And I can give you the reference to the paragraph. So I think it's just making sure that there aren't unintended consequences by using fair value.
Thank you, Lindy. And I'll go to Todd next, but I wonder whether that's actually a hangover from that discussion that we had about leaving the reference to market value in IPSAS 43 rather than fair value. Because I think it's, if I remember rightly, it's market value in IFRS 16 that the ISB left that, but I'll leave that as a question at the moment, and I'll just take Todd's response and then go back to staff. Okay, Todd.
Thanks, Ian. And in terms of the sort of the literature review and lining things up, can't argue against that itself. You know, in each of the cases that you've demonstrated there, yes, we go with fair value where you've got the right of use of an asset, or you've been given an asset. I do, however, have some concerns with this, and they are multifaceted concerns. So I immediately look at this and think about my own jurisdiction. So we have the government that's probably got about 3,000 entities that are consolidated into the government. There will be a lot of arrangements that may fit into this concession release model, and it's going to create a huge industry at huge cost to go down this track for probably very little benefit. And so I do worry about the cost benefit of this from purely looking at my jurisdiction. I also know that there is a standard setter out there that has tried to adopt this approach, and that's the Australian Accounting Standards Board. So they went down this track, and their experience was they had to back down because their constituents said this is just about impossible to do. And part of the reason for that is, how do you actually get a fair value for the right of use asset? And in saying that, for public sector assets, we're into probably depreciated replacement cost, as we were discussing yesterday. It's hard enough for an entity that owns an asset and has all the information to work out the depreciated replacement cost of an asset. Are we going to be requiring entities that don't actually own the asset to somehow get all of that information to come up with values to be able to recognise these things in the first place? So those are just a few examples of where I have some concerns with actually mandating and going down this track. And I do wonder whether we may need to have a cost or fair value option to take this forward. And maybe just as a final point in terms of concerns, around 5 years ago, we issued an exposure draft on leases that dealt with this sort of stuff. We got quite a lot of pushback 5 years ago around taking this approach to concessionary leases. And there's a saying, certainly in New Zealand, if you always do what you've always done, you'll always get what you've always got. So we shouldn't expect, if we expose this, any different reaction than what we got last time, which is quite a lot of pushback. And so I think there is a bit more thinking that we need to do here. So acknowledge the analysis, it makes sense. Practically, I think there are some significant issues that we need to think through, and that may be jurisdiction specific in terms of some of those issues. It would certainly be an issue in New Zealand and Australia if we just mandated fair value.
Thank you, Todd, for reminding us about that. And I do remember being in a discussion about lifeguard stations for nominal consideration from Auckland Council, and that was fairly forcefully put. So thank you for reminding us on that. I think perhaps maybe Lynn, you wanted to come in. The other thing, actually, just before you do, I wonder whether we can. There's also something that's lurking in my mind about the difference between initial and subsequent measurement. So that's just another thing that we might want to reflect on, which might go back to your point there, Todd. So Lynn, perhaps if I can go to you, and then I might ask Dave or David just if they see any resonances with the differences between measurement on initial recognition in the draft measurement standard and subsequent measurement. Lynn, to you.
So I wasn't necessarily going to come back on what's been said. I was just going to share the UK experience where we have also implemented IFRS 16, and we've included in the definition of leases, zero consideration and nominal consideration. We haven't had the same pushback, and yet we do have significant number of entities and a significant number of intergroup arrangements as well. So it's a different experience to what Todd is describing from Australia, from our jurisdiction perspective.
Dave or David, do you want to make anything in response to my question? From David's face, I know the answer to that is no, but anyway.
How could you guess? Well, I can't think of anything off the top of my head, so and nor could Lynn and nor can Dave. So, but I mean, it's something that we can bear in mind.
Joao, any reflections from you then on what you've heard?
Yes, very interesting views, and thanks to the board for those views. Going back to Lindy's comments, so I'm going to have to check those references. I don't have it on top of my mind, but I'll engage with you offline and make sure that we have that right going forward on the market value, and we don't have any unintended consequences for using different terms. On Todd's comment on the ED 64 that it was published 5 years ago, yes, he was quite right. There was a pushback for going to fair value, but there were also other jurisdictions that were happy with going with fair value, and also this discussion speaks out about that, because in Australia, in New Zealand, there is some reluctance in going there along with Australia, but in UK it is. So what I would say to the board is, because this is very much jurisdiction specific, the board will need to take a decision on going with optionality or going with the requirement. Thank you.
Thank you, Joao. I mean, so from the discussion so far, I think we see the conceptual logic to this. I think there is a question which just needs to be reflected on, and I think we need further advice on this, because we do have this residual issue from when we approved IPSAS 43 about fair value versus market value. And I think at that stage, there wasn't really a kind of totally substantive answer as to why IASB had left it as market value rather than fair value. Being honest, it felt like it was probably an issue too far for them at that stage. And I think that's where, in our measurement project, we've actually taken the thinking forward in terms of techniques. That market value is a technique that sits under fair value in this case. So I think, we'd left it when we did it that there might or might not emerge as an issue. So I think there is a kind of question there as to, if we want to start to tie things up, is this something that we should actually think about addressing? So that's number one. I think the second thing is, again, also thinking through how this ties into where we're going on measurement, because there might be something that addresses what Todd is talking about in terms of initial recognition and subsequent recognition. And I don't know the answer to that, but I think it just needs to be thought through to make sure that we're consistent. And then I think also to Todd's point, which is around practicality, if we tentatively decide that we're going with this decision, I think there's how does that fit with what we've got elsewhere in terms of cost benefit and so on. And I think we need to explicitly address that and draw some conclusions which might mitigate to an extent, some of the practical considerations, because I think we have got some, possible reliefs and so on already around the place. So I think they're, if you like, probably what we should do is say, well, there's a decision in principle that we will go with what conceptually makes sense, but we just need to look at those three issues if we go down that route. Todd, back to you.
One thing that the task force might be able to explore here is whether or not there could be an exclusion in terms of the scope of the standard where you've got entities that are part of a group, and governments don't just report a set of government financial statements. Certainly in our jurisdiction, all of those entities, or most of those entities that are consolidated, have to report separately, and that's appropriate for transparency and accountability purposes. But I wonder if there was a scope exclusion for them having to take this fair value route, and agree there might need to be some good disclosures about what's going on to make sense of it, but the cost benefit of actually doing all of this, I think, is a real issue that we need to address. And we need to think about it from a user's perspective as well. Is there going to be a lot of benefit in going to all of this work where you've got entities that are ultimately part of a group? So perhaps if the task force could explore that matter, it could help.
Thanks, Todd. I mean, I think we have to be very careful here because obviously we're writing principles rather than rules. So I think that's why I think we need to have a look at this in the context of what we've already got, understanding the practicality of what you said there. So I think if we can have a look at it in terms of how does this fit with our other literature. And again, I think that underlines the challenge we've got with all of this. So I've got a number of flags up. Lynn, as task force chair, I'll go to you first, then I'll take Renee, Lindy and Scott.
So my first observation is that the task force have already looked at the consolidated point, and that's decision 6 in the papers. So we have considered that. My second observation would be, my personal view is I don't think it's for this board to do a cost benefit analysis and come to a conclusion for the entirety of the public sector. For me, the cost benefit analysis should be done at entity level rather than us as a board doing that. I would not favour a scope exclusion. I think there will be judgments at entity levels and maybe jurisdiction levels that we should not be seeking to second guess. I firmly believe that this is better accounting at an entity level as well as a consolidated level, and we wouldn't want to in any way deter people from or prevent people from adopting this at an entity level with some form of scope exclusion. So from a personal perspective, I would not be in favour of a scope exclusion. I think if there is some form of overwhelming evidence, then that would come through in a further consultation responses. And I don't think that we should be preempting that with any decision now. Like I say, we have considered the consolidation point. We didn't see a reason to bring a different recommendation to the board at this stage on that. We have considered it.
Thanks, Len. And on that, I think actually probably some of this is actually just making sure that we communicate the way in which we've considered it and the guidance that we think should be applied to constituents. And then, as you say, they can feed back accordingly, because that may well address already some of the entity-specific circumstances. So I think, that's probably how we communicate that in the exposure draft and then the final guidance. So, I think drawing that together and just, giving our constituents the assurance that we have thought that through, I think that would be really helpful. I've got Renee and then Lindy and then Scott, you put your hand down. So I think I'm on to Liang at that stage.
I'm on a different topic, so I don't know if there are others who want to continue.
Okay, so Lindy, are you on? Yeah, okay.
Yeah, I think the challenge is if we decide that we're going to recognize these, then the measurement problem is going to exist, either initial recognition or subsequently. Even if you continue with cost, you might have to assess for impairment at some point and then try and value it. Or if you use the valuation model, you're going to have to get a value to it using our measurement standard. So either we decide you're going to have to recognize these and then they have to decide if it's material or not, or even if it's, if they, I don't know, maybe looking at IPSAS 1 on cost benefit, but if we say you recognize, we're going to have that problem.
I don't think there's a neat answer to this, but I do think what we need to do is actually ensure that we've dealt with it in a conceptually consistent way, and then in line with what we've just articulated, that we have brought together the relevant guidance on how it would be implemented in practice. And I think that's probably what I'm asking for, because, for example, we have got provisions on deemed cost and so on. So I think actually that just needs thinking through a bit more to make sure that we have just joined all the dots up. So if we can just elaborate then on that in terms of the decision and instructions. So I'll go to Liang next, if you're in on the points that have been made, before I go to Renee.
Thanks, Chair. Actually, I share the same concern as Todd. When the private sector in our in China, when they apply the lease model, the new lease model, which is converged with IFRS 16, actually there are quite a lot challenge in practice, because the model is very complicated. I'm thinking actually for the concessionary lease, the new model as staff and task force just proposed, actually it will be much more challenging, much more complicated than the the IFRS 16 model, because initially it should be measured at fair value. I have a big concern whether we can have the fair value for such kind of concession release for public sector, because firstly, it is transaction between public sector. Secondly, it is concessionally lease. So I think it may be very difficult to find out a good way to get the fair value. Lastly, I'm thinking about the subsequent measurement. It seems that the paper may not discuss too much about the subsequent measurement of the right of use asset. I suppose it will be the same as the normal right of use asset. That means it will be amortized, will be depreciation over the useful life. So it looks that on the debit side, on the asset side, the asset will be amortized over the useful life. For the credit side, on day one, we will have a large amount of revenue as proposed in the paper. So actually, if we look at the whole life, actually, I think the two amount, the net impact is the zero, because the amortized the expense, the amortization expense for the whole life will be equal to the fair value measured at day one. So I'm wondering whether it is what we want. We have done a lot of work to get the fair value, and on day one we recognize the asset and recognize the revenue. Then over the next a few years, during the useful life, we amortize the asset. Then for the whole year, actually, the net impact is zero. To me, it is a bit too complicated, and I'm also have concern, have doubts whether the financial impact is what we want. Thank you.
Thanks, Liang. João, I think you wanted to come back in response to the points that Liang was raising.
Yes, thanks for the opportunity, and thanks for Liang for those comments. I just want to provide one clarification to Liang and also to the board. So, and in line with what Lin D said, so IPSAS 43 already provides optional measurement basis for fair value in subsequent measurement. This means that if the lessee classifies the right of use asset as investment property applying the fair value model, he can also do that for subsequent measurement. The same goes for if the lessee classifies as property, plant, equipment applying the revaluation model, which has the fair value. So he can also apply the fair value to the right of use asset in subsequent measurement. So what we are now, proposing, the task force and staff, is to extend these to initial recognition. So all this to say that fair value is already applied in IPSAS 43 to the right of use asset. So it is not a brand new concept that we are introducing. I hope that this is clear. Thank you.
Sorry, may I clarify? So do you mean that if it's investment property, that it could apply the fair value option, but if it is PPE or other asset, the ROU of other asset, not investment property, I suppose only the cost model, the depreciation model could be applied for the subsequent measurement?
Yes, I can confirm. So the lessee needs to make a policy election. So if the lessee elects to apply the fair value model in IPSAS 16 to right of use assets, then he needs to apply the fair value for subsequent measurement also to right of use assets. And the same goes with property, plant and equipment. If the lessee elects to apply the revaluation model, which has the fair value, then it needs to also apply the fair value to the right of use asset in subsequent measurement.
Okay, thank you. Thank you for your clarification.
So I think, excuse me. So I think we do need this paper that actually will just walk us through the interface between what we're proposing here and what we have in the measurement standard or the draft measurement standard, because you know, I can see that we've got provisions in IPSAS 43. I can see that we've got provisions coming in measurement, and I think what we need to do is just iron out the issues that we've picked up on in the discussion and be totally clear. For example, are we removing the option to, you know, for initial recognition at cost? How does this fit in with not only IPSAS 43, but also with our draft measurement standards? So we've just got to make sure that this actually hangs together in a coherent way, and we're clear in the proposal what the option is that we're removing and why. So I think that's really the instruction, that we just have to kind of tighten all of this up and be absolutely clear. Thank you. The job description of the TA just expands even further. So I think that's really what we need to do. So there's a conceptual, how does this fit with our guidance? Then there is the how does this fit with the provisions in our existing literature, the principles in our existing literature in terms of the practical application here. Because I think, you know, we kind of see the logic of fair value precisely because of the fact we're in a concession situation, but it's just actually marrying, is being clear about exactly how these various different bits of guidance actually hang together, and then how that applies to the practical situation. And I can see, you know, if we are at fair value, then you also need to look at the hierarchy that we're introducing into measurement as well, which will have a practical impact there in terms of the measurement technique that you take. So I think it, you know, it's not that we're a million miles away, but I think in terms of maybe we take a tentative decision that we should go down this route, but it's subject to just those further pieces of work, if that's okay. So it gives the task force a way forward without leaving it too open, but just subject to those pieces of work. Now, Renee, you've got flag up still.
Thank you, Chair. I totally agree with the approach. I just want to check in because a lot of these assets are going to be used for their operational capacity. I'm thinking of our conversation on measurement yesterday. So we must have a placeholder here, as we do in other standards, that there may be consequential amendment here because fair value for now is the only current value that we have in the literature, but it could very well be a choice between fair value and current operational value in the event, depending on how the asset is to be used. It would likely end up being depreciated replacement cost, but conceptually, I foresee in the future that here it wouldn't just be straight fair value, as it wouldn't be in maybe in other standards as well. So this is just an additional placeholder. That's what I want to confirm.
So I think there's a bit of a contingency there, as you say, and I think it's a good point. If we look in terms of scheduling, I would say and obviously this is subject to us continuing to make progress on measurement. We are scheduled to approve the new measurement standard in December. So this could come together with the exposure draft here to address that consistency point there. So I think let's have a look at that and log that as an issue, because I think we would need that sequencing, as you point out, in terms of measurements. We're not going to have that luxury in terms of, or likely not have that luxury on the revenue and transfer expenses, where we're, as we know, indicatively, we're looking at re-exposure, although that's a final decision we'll take in December. So I think we note that, and providing we make progress in that way, that will give us a logic in terms of how we sequence our decision making. Okay, anything else? Patricia.
Thank you. I think Lindsay has referred the paragraph 15. In the paragraph 15, the objective is to establish the price. Maybe for some specialized assets, it's not possible to define the price. Depends on the progress in the measurement project. Then my suggestion is reflect. Would be to reflect more about the specialized assets, because in this case it's more difficult to define price. Thank you.
Yeah, I mean, I think that comes into the practicality, and it comes into the consistency with the draft measurement standards. So absolutely agree, we need consistency, and the techniques should be applicable across, which again, I think then would pick up the practical issues that have been raised, and also the points, by both Todd and Liang. Okay, so in principle, we go with this, but we need both that conceptual tie-up and then just to ensure we've worked through what the practical, both the practical measurement issues would be, and also the interplay with what we have in terms of the principles on recognition and so on around the smaller entities. Okay. João, then in terms of 6.2.3 and the decisions for that. Good. Okay. Introduce this slide. Thank you.
Yeah, thanks, Ian. So thanks to the board for this very helpful discussion. So it went so big that I don't need to bring the recognition, because all the discussions flow from the discussion that we just had. So I'll just move then to the second paper on lessors.
Sorry, I
yes.
just wanted to focus on the revenue recognition, because we discussed the valuation of the asset, but we hadn't picked up on the revenue point. So
okay, that's fine. I can bring that topic now then. So from the revenue perspective, so staff once again did the same study in terms of IPSAS literature, and went to IPSAS 23 to assess how the revenue would be accounted for that component, the non-exchange component. And we draw the parallel with concessionary loans. So there is already guidance that that revenue on initial recognition should be recognized except if a present obligation exists, and if a present obligation exists, then it is recognized as a liability, and that liability will be unwound as the obligation is satisfied. So, because from a conceptual perspective, in the lessee's accounts, leases are financings to the right of the use asset, So we are proposing a similar accounting for the non-exchange component. And so we ask the board if it agrees to recognize the concession component as revenue, except if present obligation exists where it is recognized as a liability. And with this, I'll open the floor for discussion here.
Okay, thanks, Joao. Camilla, I think you're first.
Thanks, Chair. Thanks, Joao. And thanks for all the interesting discussion we have had so far. My concern is if it's necessary that in one concessional list we identify this exchange and then the non-exchange component, because that means that for the non-exchange component we refer to IPSAS 23, and then for the exchange component then to IPSAS 43, that increases the complexity. So I was wondering if we can assess the concessional list as a whole, and it will be just for by definition then automatically a non-exchange transaction that will be accounted for by IPSAS 23. And then my suggestion, after hearing all these discussions, is that we take a step back and on the classification for a lease of being as concessional lease, it means that it's below market value. That means that the preparer already has an indicator of what is the fair value or market value in order to classify that lease as concessional lease. If they do not have that information, then how can they classify it as concessional lease if they cannot be certain or don't have supporting evidence that the value is below market value? So I think we should also stress on that. The classification that will be key in deciding which standard to apply, if IPSAS 23 or IPSAS 43. But the mixed approach here for one concessional lease, I share the concerns of other IPSASB members that would be too difficult to apply in practice. Thanks.
Thanks, Camilla. Lindy, are you in? Yeah, okay. So if I take Lindy and then perhaps we'll reflect on that point that Camilla has just made.
Thank you. So I agree with the recommendation. I think it's just important that we flag in the revenue project that we say that these concession, when we bring it into the new revenue standard, that we clear that it's a concessionary lease or all leases are binding arrangements, so that we flag where the section of the standard the lessee needs to apply. So I agree. I'm just making sure we flag and point people to the right section in the future revenue standard. And for now, I agree with what you're proposing there.
Yeah, thank you. Certainly that was going through my mind. So, Joao, back to you on Camilla's point, because I think there is this sort of practicality. So, you know, to the broader point that you raised, Camilla, obviously that's wrapped up in the discussion that we've just had about how do you measure, how do you recognise. But then I think there's the further very valid point that you raise, which is around actually is the non-exchange element separate. So Joao, if you can comment on that part, please.
Yes, Ian, and thanks, Camilla. That is a very important point, and thanks for raising that for me to perhaps be able to clarify to the board. So the approach that staff and task force took is the same that it is now in our literature, concessionary loan. So when there is a concessionary loan, both parties need to assess the transaction and identify the exchange and non-exchange component in that transaction. So therefore, as you quite rightly said, the identification and classification is very important at the initial stage. And the guidance that we are proposing in the draft TD is very much similar to what we already have for concessionary loans. We have just made some tweaks in terms of terminology. Having done that classification and identification, then the next step is precisely to apply the appropriate standard to the accounting. So this means that for the exchange component, the lessee will apply IPSAS 43 because the guidance is already there. For non-exchange component, the lessee will apply IPSAS 23 in the same way it is already there, the guidance for concessionary loans. So we are just following the same approach in terms of identification, classification, and separate and the componentization of those portions within the transaction. Perhaps we need to make that more clear, and the staff is more than happy to engage with Camira if something more needs to be done in terms of the guidance. Just before wrapping up my intervention, I just want to clarify that within the discussions that we had within the task force, we came to the conclusion that much of what we are proposing in terms of the concepts and the guidance in the draft ED will be much clearer when we'll have the illustrative examples to apply those principles that we are proposing. And so just to kind of give some assurance on the linkages between the concepts and the practicalities with illustrative examples. Thanks again, Camira.
So, Joel, just back on that though for a moment, because I think there is a question in my mind as to, obviously we have this split in IPSAS 23 between the exchange and non-exchange component. And I'm wondering whether that's actually going to be maintained in the draft revenue standard. So I think there is a consistency point there that I want to check on, because I think, as you're saying, you're being consistent between 23 and the proposal here, but I'm not sure whether we're going to maintain that split between exchange and non-exchange in the draft revenue standard. And if we're not, then I think Camira's point comes in that practically, actually, do you need that? So I think that's something that should be taken away and just looked at, because there is obviously a practicality issue here. So unless that can be answered immediately, and
yes,
I think,
Ian?
Yeah.
May I? Yes. Staff and task force did look at it, and staff had also discussions with staff led with the revenue and transfer expenses. In this case, is the most important, the revenue, and we got the feedback from them that the current guidance that exists for concessionary loans will be substantially carried over to the new draft revenue standard that is being developed. Of course, there will be some terminology changes, but the principles will carry over to that standard. And we are also recommending, if the board agrees with this approach, that a similar approach will be taken to this concessionary leases component to be also carried over to the new draft ED on revenue.
Okay. I still remain to be convinced personally. Lindy.
So I was going to raise a comment you raised now, but so in the current draft revenue standard, it says that the reporting entity must apply the off-market portion of the concessionary loan. It's in there already. So the idea is also to bring the off-market portion of the lease into the new revenue standard. My comment was we need to guide them which part of the revenue standard should apply, because I think for off-market loan, it could be a binding or maybe not a binding arrangement, but definitely for a lease, it's in the binding arrangement section. So it's currently there and it would probably come in as well. I think also linked to your concern, I think we need to future-proof what we are changing in IPSAS 44 and not refer to exchange, non-exchange, because that's what we're putting in now. So we would have to have something around, market, off-market portion or something like that, just to change the wording, because we're moving away from it. Currently, we are saying it's fine to keep that wording in the updated IPSAS 23. It's just in the 40. I don't know the numbers, but the current lease standard, the new one, we need to future-proof it, yes, so that we don't have exchange or non-exchange.
Yes. Yeah. Okay. So I think we do need clarification on this. It is tricky, but we just need to be very, very careful that we don't introduce approaches and terminology which is old speak, because it will be for a period, but we don't want to force people to make further changes unnecessarily. Okay, Patricia.
Thank you. Considering the current literature and considering the transaction, my question is if there isn't a condition if the lessee has the control of the underlying assets. If in fact it is a lease transaction or not. Because in some case, I think, in fact, in essence, the lessor transfers the assets, transfers the control of the assets for the lessee. Thank you.
Dave, you wanted to come in?
Well, I would just say that seems like going back on previous board decisions in IPSAS 43, where we've decided that we are using a right of use model on the lessee side. So I appreciate your point, but I think that that decision has been made that we'll focus on the right of use and not the underlying asset in lease transactions.
Patricia?
I understand your point, Dave, but now we analyze the specific public sector issue. For example, in this case, what the lessor in fact control? Maybe nothing, and in fact is a transfer of the asset.
I mean, I think this needs working through offline, but I think it's within the overall context that we have the new leasing standard, and the board made a decision that we were not going to depart from that for the public sector context. So that, you know, we are in an aligned standard framework. So I would suggest that actually that staff liaise with you in terms of that point outside the meeting, but we are not changing IPSAS 43 for any, you know, it's how this applies in the context. Okay. Okay, so I think we have that consistency point that needs to be worked through, but I think in terms of the decision in principle that we agree with staff's recommendation on this. Okay, so João, move us on then, please.
Yes, thanks Ian, and thanks to the board for this discussion. So staff will engage offline with the respective board members then. Moving now then to the following agenda item, which is concessionary leases, measurement and recognition for lessors. So as it has already been discussed within this meeting, so what we have for lessors in IPSAS 43 is a different model than for lessees. So for lessees, we have the right of use model that David has just explained, but for lessors, we have the risks and rewards dual model. And these changed the analysis that we have when analyzing these transactions, and I will try to show the board why. So just a brief recap. So what we have in IPSAS 43 is that lessors are required to classify the leases as a finance lease or as operating lease. So under this model, operating leases are viewed as a service, and finance leases are viewed as a financial instrument. In this case, the financial instrument is the net investment in the lease that it is recognized after the derecognition of the underlying asset. This means that in a finance lease, the lessor derecognizes the underlying asset, but recognizes the net investment in the lease in its place. So having these two different transactions, staff and the task force did the same walk on the analysis that we did for lessees. So our first stop was with concessionary loans, and our conclusion is that the transactions, these two transactions are different from loans. And why is that? Because in a loan, there is an exchange of similar assets. So there is a derecognition of cash with a recognition of a right to receive cash, which is the loan itself. And in a finance lease, we have an exchange of dissimilar assets. So we have a non-cash asset that it is derecognized, applying the applicable IPSAS, and it is recognized the cash, in this case, cash or right of use or right to receive cash, which is a net investment in the lease. So there is a direct substitution of assets, of different assets. And when comparing with the services, well, we also found that those are different transactions, because in a loan, there is a derecognition of asset, which is the cash that it is being transferred to the lessee. And in operating lease, there is no derecognition of assets. So the lessor continues to recognize the underlying asset in its accounts. And what it makes is recognize revenue as the lease contract is fulfilled. So our conclusion was that from a lessor perspective is that leases are economically different from loans. And I'll make a pause here, Ian, before moving to the concessionary leases, because I have also a similar analysis for concessionary leases under these three types of transactions, to receive board's feedback on this.
Okay, any comments from members on the analysis that Joao's presented there? Patricia, are you still in, or? Okay. Okay, not seeing any flags up, so I think members are content with what you've said so far. So move us on, Joao, to concessionary leases.
Thanks, Ian, and thanks the board for confirmation on this rationale. Moving so this part of analysis was, okay, we have those three types of transactions, operating leases, finance leases, and loans. So what we analyzed is that, okay, what are concessionary leases and what are concessionary loans under this? So our analysis was, okay, that this, the non-exchange component is embedded in the transaction. So it is not a separate transaction that we can have a different type of accounting. Because the concession component is embedded in the accounting model of those transactions, we cannot simply disaggregate from that, as we can do that in lessee accounting. And this was a kind of a big finding that we had when we did this analysis. And why is that? Because in a concessionary finance lease, the concession is the price, is to the price of the underlying asset that is transferred to the lessee. So this means that when the lessor derecognizes the underlying asset, it derecognizes that asset in accordance with applicable IPSAS. And in operating lease, in a concessionary operating lease, it is to the price of future lease payments yet to be recognized. And so, because we have different focus of where the concession is to, this is also different from a concessionary loan, because in a concessionary loan, the concession is related to the newly recognized financial asset, which is the loan, and applying the time value of money concept into that measurement. And in a concessionary finance lease, the focus is on the derecognized of non-cash assets. And in the concessionary operating lease is on foregone future revenue related to recognized non-cash assets. So once again, we found that as a result of different transactions that we have, we also have different focus on where that concession is located. And therefore, we could not conclude that we could have some analogy with with the concessionary loans. So our main conclusion is that from a lessor perspective, concessionary leases are economically different from concessionary loans. And before moving into the recommendations, I also once again receive board's feedback on the staff and task force findings on this analysis.
Thank you, Jean. Just pause to see if there are any questions or concerns on the analysis. Not seeing any flags up, so I think we're good to proceed, Jean.
Thanks, Ian, and thanks to the board also for the confirmation. Having done this analysis with concessionary loans, then we move our eyes into the remaining literature that we have also that can be applicable here. And that's why staff and the task force is recommending the IPSASB that for concessionary leases to measure the transfer asset at its carrying amount in accordance with the relevant IPSAS. IPSAS 16, investment property, IPSAS 17, property, plant and equipment, IPSAS 31, as appropriate. And this is also consistent with IPSASB's decision at December meeting in the transfer expenses project to measure the non-cash assets at its carrying amount when it derecognizes. And of course, to recognize the cost of the transfer asset on disposal in accordance with the relevant IPSAS. So we already have guidance in our literature to how to account these and recognize the disposal of that asset. Regarding concessionary operating lease, to measure the lease payments at cost in accordance with IPSAS 43, because our current literature, which is IPSAS 9, does not permit to recognize foregone revenue. So it's a very strong principle that we currently have. And of course, what staff and task force discuss is that perhaps it might be a trigger for impairment, and therefore to assess whether the underlying asset is impaired in accordance with IPSAS 21 or IPSAS 26 as appropriate. And just before wrapping up the recommendation, we already have this guidance in IPSAS 43 to assess whether the underlying asset is impaired or not in specific situations. And with this, I'll open the floor for board's discussion again. Thank you.
Thank you, João. So in terms of this discussion, if we can split it into two, so I'd like to take any comments from members on the finance lease, concessionary finance lease recommendations before we discuss the concessionary operating lease. So if I can have any comments first on the concessionary finance lease recommendations. So not seeing any flags raised, so I think we agree with those recommendations. So if we could then move to pick up any comments on the concessionary operating lease recommendations. Yeah, Lindy.
I mean, I think it's just to confirm support. I know, João, you mentioned IPSAS 9, but it's also in our new revenue standard where we talk about implicit price concessions. So it's also in line with our new thinking in the revenue standard as well. Thanks.
Thanks, Lindy. Noted. Renee.
Just a very small detail. We say recognize at cost. Should we say it's the transaction price, or I'm just thinking the terminology.
Thanks. So if staff can just have a look at that and see what the consistency point is on that. Thanks for that, Renee.
Thank Thanks, Chair. Just a small suggestion. When we are referring to cost, similar to what René mentioned during the agenda paper, we use the same term cost, but we offer different forms of estimate the cost for each specific case. That's a bit confusing, and I'm sure it will be confusing for the preparers as well. So if we can use different terminology so that it's easier in the application. And then in regards to these suggestions of considering a concessionary lease, operating lease already as an impairment indication, I would personally not go in that direction, because if you are talking already about a concessionary lease, it's already known that it's below market terms. So if we are considering already that as an impairment indication, we will add additional burden to preparers to start testing for impairment. And so when we already know that the concessionary lease is already below market terms, so it should not be directly related to impairment, at least not as considered as an impairment indication. Thanks.
Thanks, Camilla. So I think your first point is covered by the instruction to staff to look at consistency of terminology with the draft measurement standard. João, on Camilla's second point on impairments.
Yeah, very, very good point, Camilla, and thanks for raising that. And we should have been clear, and perhaps that did not come across in the papers, but we are not proposing amendments to the impairment standards because of this. So just to give some assurance, what we are saying is that perhaps it might be a trigger, but we are not saying definitely that it is. And why is that? Because the current IPSAS 21 and 26 already provides extensive guidance of indications of impairment. And staff and task force discussed this, and we did not find any reason to add or modify that guidance that it is already there. So basically, just confirm that the current status quo will continue on this, Camilla. And thanks again for raising the point.
Thank you, João. Well, whilst you've been talking, I've had 4 flags raised, so I suspect there is an issue here. So if I can take Todd, Lindy, Nima, and then Ajith.
Thanks, Ian. Listening to some of the conversation, it sort of struck me that taking the impairment approach at the extreme could end up in the derecognition of the underlying asset. So you might have an asset that you're not actually getting any revenue from because maybe it's set at a nominal amount which you never collect. And so if that's a long-term arrangement, this could result in that asset essentially being written, maybe not written off, but written down to next to nothing. And I'm just wondering whether that is helpful information for the users of a set of financial statements or not. So I've got a question in my mind about, you don't argue with what's set out here in terms of our standards, but I'm just wondering about it from a user's perspective, whether that's going to have the information value.
So I think both Ross and Lynn were quick on the draw against your comments. So perhaps Lynn to you, or Ross, I don't mind. Ross, do you want to pick that one?
Yeah, I take your point, Todd, but I think, again, let's remember that if it is overly long-term itself, then it would likely be a finance lease to start with, so we'd be in different accounting. So I think it has to be an operating lease that we're in this model, or you'd kick yourself into the finance lease if it's too long-term or too much transitions.
Yeah, but sometimes in the public sector, it might be an indefinite term. So you're using them.
Okay, so Lindy and then Nima, then Ajith.
Yeah, I didn't think about this before until the comment was raised, but I guess now I'm reminded of the discussion we had on Tuesday on onerous contracts and assessing the asset for impairment before you enter into the transaction. I think we're actually being consistent here. That for these types of arrangements, you do need to assess for impairments. I wonder if there should be maybe just a check-in with the transfer expenses team just to see that there is alignment. But I think we've been consistent with the proposals we had in the transfer expenses project in here.
Thanks, Cindy. I mean, I think that's one of the challenges that João and the task force have had, because obviously, you know, we've taken some important decisions on transfer expenses on Tuesday. So I think that's a consistency point, which is probably an overarching consistency point here, which is to keep liaising with Edwin on transfer expenses to make sure we maintain consistency. And you're quite right, we had the impairment point raised there. So I think that's the specific, but then there's a generality here. Nima, then Ajith.
Thank you, Chair. I was thinking of the debits and the credit. And sometimes in public sector entities, we have the cases of allocated properties or shared properties. Office space entities would be allocated. Sometimes they have the agreement, but in most of the cases, we do not see the lease agreements. And these are operating leases. And it's those areas where we'll say that they will follow the standard. But the question sometimes will be at what value? I think this is an area where we can put probably guidance or examples so as to be clear as to how those should be treated.
Ross, did you want to come back on that one?
Well, just one point I think to note is to be a lease in IPSAS 43, it has to be a contract. So we've taken over the IFRS 16 guidance pretty closely. So if you have arrangements where you don't have documentation, I would say it's probably not going to fit the leasing standard as we've got it. Just want to note that.
I mean, that was, I think, one of the cases that we raised, wasn't it, in the request for information. And I'm assuming, therefore, that, okay, this is the first substantive area that we've addressed, but I think we will be making sure that we work through those other areas. Am I right on that? So I think probably your point would come up in that context, Nima, that was one of the cases. Lynn, did you just want to come back on that?
Yeah, it's planned for September, that discussion on shared properties.
Okay, thanks. So I think keep a note on that point, Nima, and then consider whether you need to bring it up again when we have that discussion in September. Ajith.
Thanks, Ian. I want to find out from João whether both in relation to the concessionary lease as well as the operating lease, whether we are recognizing a known loss or a known concession based on the contract only at the end of the fulfillment of that contract, because it's a known loss at the point at which the contract is entered into, whether it shows the true and fair value in accordance with our normal accounting principles.
João, back on that.
I'm sorry, Ajith, I didn't understand well because of the sound. I wonder if you can please repeat your question.
Yeah, sorry. No, this yeah, looking at both the concessionary finance lease as well as the concessionary operating lease, it appears as if a contractually granted concession, both for the finance lease and the operating lease, is recognized only at the end of the fulfillment of the contract, and that loss being recognized only at the end may not show whether it shows a true and fair view before that period. Because there is a problem relating to non-recognition of a known concession based on a contract that's already been signed. Thanks.
Yeah. Thanks, Ajith. I think I understood now your question. So just to be clear, so with concessionary finance leases, the recognition of the loss will be at the commencement of the lease, and when in a finance lease there are two simultaneous transactions. The first one is the derecognition of the underlying asset, and for that we apply the current the applicable IPSAS 16, 17, IPSAS 31 as appropriate. And then the second accounting is the recognition of the net investment of the lease. If there is any difference between the carrying amount of the underlying asset that it is derecognized and the net investment of the lease that it is recognized, that difference will be recognized as a loss. So it will be a loss at the initial, at the commencement date of the lease. There will not be any further losses going forward. Because it results as a difference, an arithmetic difference between these two accounting journals. For operating leases, it is different because in operating lease, the lessor continues to recognize the underlying asset. What happens is that the revenue that the lessor recognizes is less than he could otherwise obtain in a lease at market terms. And so in this case, the cost of concession is more of an ongoing cost of a concession. While he has that contract that it is at below market terms, the cost of the concession will be the arithmetic difference between the depreciation of the asset, any costs associated with the asset, any impairment charges that might occur, and the revenue that obtains, that will be less than it would otherwise obtain. So once again, because the cost of concession is a difference, an arithmetic difference between different journals, and this difference will occur throughout the lease contract because the lessor continues to recognize the underlying asset in its accounts. So wrapping up, because concessionary finance leases and operating leases are completely different in its accounting, then the cost of the concession will also be shown differently because of the main transaction that it is embedded with. I hope I have answered your question, Ajit.
Thank you, João. I think if Ajit has further questions, can you take those offline out of session, please? So, Todd.
Thanks, Ian. Just listening to the conversation, there was one thing that I want to check in about. I think the word contract was used by someone, and I'm sitting here wondering whether we may have been talking at cross purposes. So when we are looking at all of this concessionary lease stuff, is that in the context of a contract with rights and obligations on the two parties? Because I think in my experience in the public sector, it's not as clear as that. There will be government-owned assets that get used by various entities that won't necessarily be documented in a contract signed up by two parties. So are we talking here about that type of an arrangement, a contract signed up by two parties, or are we talking more broadly? Because if it's the first, there may be less angst in this if we're going to deal with the other side in a different way. So I just really wanted to check in and clarify.
Lynn, you want to come in on that?
Yes, so for right here, right now, we are talking about contracts. In September, we have got a work item, an agenda item on arrangements similar to leases. So for today's discussion, we are talking about contracts.
Okay, thank you. I think it is important to be, clear on the space we're in. But thanks for that clarification, Todd. Okay, so I think we are content with those recommendations, subject to the making sure we've got the clarity in terms of language and terminology, again with measurements. And I think measurement is coming through as being really important in terms of terminology and approach here. So with that, move us on, João.
Yes, thank you, Ian, and thanks to the board for this very helpful discussion. It will definitely help the task force and staff move the project forward and bring more on this topic for the September meeting. So the last part of the accounting model related, it is the presentation and the disclosures that are attached to the accounting model itself. So staff brought a draft exposure draft. So in this case, I asked the board to take a look at the relevant paragraphs. So for lessees, we are proposing amendments to both IPSAS 23 and IPSAS 43. So those are the relevant paragraphs that are in the slide. So I ask the board to turn your eyes to the draft TD into those relevant paragraphs and to receive the feedback for lessees for now, and then we can discuss for lessors. So, but before passing to the board for discussion, so what I want to highlight to the board is that staff and the task force have the approach to these disclosures that are related to the accounting models. So, and not beyond what the accounting models have for cost benefit reasons. So we are not proposing other types of disclosures that are not related to the accounting model that we are proposing. And with this, I'll open the floor for discussion, Ian, for lessees, and then we can discuss the lessors. Thank you.
Okay, thank you, Jean. So comments on the proposed amendments for lessees. Nemo, you okay? So I'm not seeing any flags raised on the proposals for lessees presentation. So if we can move on then to lessors proposals. I'm not seeing any flags raised on those. So I think we're content with those recommendations, Raoul.
Thanks, Ian, and thanks the board for the confirmation. So now moving into agenda item 6.2.2, which is related to identification.
I think actually, Joe, at that point, what I might propose is rather than move into the new item, I think probably at this point we break for coffee. And I think if I suggest that we come back at 5:02. Okay, so thanks everyone, and see you back then. Okay, so welcome back, everyone. So we are now moving back to agenda item 6.2.2, and then we'll finish off with remaining comments on 6.2.1 afterwards, which is essentially the draft. So, João, take us into 6.2.2.
Thanks, Ian. So, having settled and discussed this, the approach to the accounting models, staff and the task force thought that it would be useful to provide additional guidance on identification and classification and scope of these types of transactions in our current literature. So this goes in line to some of the committee's comments of that importance. And so we are now in more into the weeds, more of how that guidance should be made and proposed to our constituents. And for that, we have 3 recommendations, and we can go one by one. So the first recommendation is to include in IPSAS 43 leases the amendments on identification, classification, scope of concessionary leases. So these are the paragraphs that we are proposing. So I just want to highlight the board before opening the floor that some of the wording will be amended as a result of the board's discussion that we had before the break. And also some of the diagrams are still a work in progress because we have also received some suggestions after the papers were posted, and some suggestions are opposing suggestions. So we'll need to work through with the relevant people that made those suggestions to find a better way to move forward those diagrams for the September meeting. And with this, I open the floor for discussion on the first recommendation. Ian, thank you.
Okay, thanks, João. So additional comments, please, on any sort of substantive points here. Lindy.
Thank you very much. I would suggest we include a definition of a concessionary lease in the standard. We do have it defined in ED 64, so I probably have to define it here as well. I guess you have comment on the detail. The one thing though that, and it's around the AGs, that some of the AGs is quite useful to be included up front, but I guess the task force can discuss it. I guess what's missing from the authoritative text in particular is it talks about measuring the asset, it talks about the liability, but it doesn't tell you that you must identify the difference and do something with it until you get to the AG. So I think maybe that's quite important to have in the authoritative text, even if we don't rearrange the AG things.
Thanks, Lindy. I think that's helpful. Could I just have responses from staff on the proposal that we need a definition of concessionary lease? Ross.
I just note that in concessionary loans, we don't actually just define it, we describe it. So, and, to the point whether we define it in an ED and we don't define it in another part of our standards, I think we need to take it away and look at consistency.
Thanks, Ross. Okay, so if we have that as an action. I think next was Liang and then Patricia.
Thanks, Chair. I want to clarify the second point, not to extend the general accounting guidance for lessees recognition assumption. I do not quite follow the logical because in my view, if we think cost benefit reason, or we think that the low value asset, if we think cost benefit reasons properly, we should apply the assumption to those short-term lease, so that those short-term lease do not need to apply the general lease ROU lease model. So I do not quite follow the meaning here. It means that those recognition assumption will apply to the concessional lease, or they will not apply to concessional lease. Thank you.
Thank you, Liang. So, Joao, do you want to come back on that? Sort of slightly moving ahead, but I think it's worthwhile just responding to that point.
Yes, thanks for raising that point, Liang. Staff and task force also discussed this, and so yes, you are quite right that there is a difference between there would be a proposed difference between the general accounting model and the concessionary lease accounting model for these two types of leases for lessees. But during the discussions, we end up concluding that because they are of low value, so they would not be materially enough to warrant concessionary lease accounting. And I think the discussion that we had before the break on the more complex type of accounting that might entail, highlights or confirms the task force discussions that we had. And regarding short-term leases, it's because mainly, it's for 12 months or less, so requiring a different type of accounting for concessionary leases, also for cost-benefit reasons, we concluded not to do that. And underpinning these two conclusions for both types of transactions is that in both types of transactions, there is no right of use asset to be recognized by the lessee. So if there is no right of use asset to be recognized by the lessee, so there is not the object of that measurement for which we would require the different type of accounting. And this was where we landed, Liang. Thank you.
Thanks for the clarification. So I now I see what you mean now, but I think maybe it could more clear that it means that the assumption that means those leases will not apply the normal accounting model.
Yeah, agreed. Thank you, Liang. So I think the action there is if Joao, you can work with Liang offline on that to work out how we explain that in terms of the various areas where we might put explanation in. So I've got Patricia and then Camira.
Thank you. I agree with necessary to describe the concessionary leases, and I think that the way to describe is considered that in a concessionary lease can may have two kinds of obligation. One is to pay, and another is to fulfill some obligation in the contract. At least it's necessary at least a kind of obligation to characterize as a leases and consequently concessionary leases. In relation to this point, I think the paragraph 18b confused me because a contract can have lease with exchange lease or non-exchange lease, but confuse me, the lease has two components, exchange and non-exchange. I think in the concessionary lease, we are talking about the non-exchange. Thank you.
Thanks, Patricia. So I think, Joao, if you can work with Patricia offline to sort that piece of drafting out, that would be helpful. So go to Camira.
Thanks, Chair. I just wanted to, it's a general comment in relation to when we decide not to extend the general accounting guidance. I consider that all the information that has been provided in the agenda paper should be documented somewhere else, because I see how for different topics, the short-term leases or lease modifications, only in one sentence or two sentences is already clarified where preparers can find guidance. I think that is valuable information that could be included in the, not in the core text, but in the implementation guidance. I'm not sure if in the basis for conclusions will be enough, because people are not aware that sometimes in basis for conclusions could be useful information on that sense. But I think that there's already in a very short and concise way, there is right instructions where preparers can find the relevant guidance. So I think we could include that in the standard. Thanks.
Thanks, Camilla. I think you raise an important point in terms of communication. And I think, if you like, what we've been working out is where the incremental changes need to come in the various existing pieces of guidance. But your point, I think, is right in terms of communication, that we need some way of drawing those together, whether that's through something specific in AGs or in addition to BCs or whatever. So I think if we have that as an instruction to staff, because you're right, we do want to draw this together. In the interim, obviously, when we expose this, that will come in the at a glance. But I think, you know, we need to think about how is this going to get presented going forwards. And, you know, clearly as well, there are some navigation issues with the fact we'll make some amendments to IPSAS 23 short term, but then they're going to appear in. So there's a number of different issues to think through. So I think if we have that as an instruction to staff, that we and task force, we just need to sort of have a think about that clarity of communication, drawing it together. Good. Okay. So Trisha, you're not standing. Okay. So let's move on then, João, to the next part of the recommendations. You're on mute, João.
Apologies. Thanks, board, and for the discussion and the confirmation on those two recommendations. So now moving to the last recommendation of this agenda item. So staff and the task force discussed three topics, and these are related to the lease incentives, lease modifications, and variable lease payments for identifying and classifying leases. So the details of this recommendation and the rationale is in the paper. So the main recommendation to the board is not to include additional guidance on these three types for the reasons that are in the slide. And without further ado, I'll open the floor for discussion to see if the board agrees with the staff and task force recommendations. Thank you.
Thank you, João. So open up for comments from members. Okay, so I think we're content with those recommendations.
Thanks, Ian, and thanks to the board for the confirmation. So now moving to the last agenda item, which is the first one. So agenda item 6.2.1 in the order of the papers. And in this case, I want to present to the board in a staggered way. So we'll start by discussing the approach and the recommendations regarding lessee, and after we decide on the lessee, I can introduce the recommendations for the lessor. So regarding the lessee, staff and the task force discussed whether we should make cross references to our current literature or to the future literature that the board is to approve in the near term. And we end up concluding and recommending to this board to make cross references when needed to the, in this case, for SEs to IPSAS 23, because it is a still effective standard and it is still to be expected to be effective for a few years in time until the new standard on revenue is becomes effective. And it is an appropriate standard for this type of transaction because it deals with principles applicable to non-exchange revenue and assets acquired at below market terms. And I want to highlight to the board that these acquired below market terms are applicable to both leases, concessionary leases that have some consideration or even significant, or even if there is no consideration at all. So it means that it is kind of a holistic approach to acquisition of assets as a result of an exchange transaction. So we have the proposed paragraphs in more detail. I'm more than happy to receive offline any edits to those proposed paragraphs. What I want to receive from the board is whether it agrees with this recommendation to refer to IPSAS 23. And why is that? Because when we discuss to cross-refer to the new IPSAS on revenue, and this goes in line with with the board's discussion before the break, is that it is expected that the new IPSAS 23 guidance to be included in the new IPSAS on revenue. So IPSAS 23 principles will be carried forward and will be also consistent with concessionary leases, concessionary loans guidance. As it was already highlighted, there will be some terminology changes to ensure consistency in this new revenue standard, but the principles will remain the same as it is for now expected. And with this, I'll open the floor to the board, Ian, to discuss.
Thank you, João. I think the board already accepted the principle that we should make the changes to IPSAS 23. Obviously, we've picked up a number of comments as we've been through this morning in terms of the tension that we've just got to address between fitting in with IPSAS 23 and fitting in with the models and terminology, or the model and terminology in the draft revenue standard. So I think unless there are any sort of major issues of principle, I think at this stage, if members can provide João with comments offline on the draft, that would be really helpful. So just check there's nothing of principle that anybody wants to raise at this stage. Okay, that's good. So move us on then.
Thanks, Ian, and thanks to the board for the confirmation. And the other part is related to lessors. So, and how this guidance that we are now proposing relates to our current literature. So as it was proposed in the draft ED and also discussed earlier with the board, so our proposal is to include the guidance in IPSAS 43, basically because we don't have an IPSAS on current on transfer expenses. This is also consistent with the approach that was taken in IPSAS 41, because there is that guidance for lenders is also in IPSAS 41, and the current IPSASB literature provides sufficient principles that can be applicable in the accounting for concessionary leases for lessors, as it was also discussed before the break. Regarding the developing standard that it is under works within the transfer expenses. So what we can say is that the staff and task force has been working with the staff led with this project, and any consequential amendments will be assessed, and including IPSASB's literature, and of course including IPSAS 43 if there is any consequential amendment that needs to be made. And with this, I'll open the floor for board discussion. Yeah.
Thanks, João. That seems a neat and pragmatic way forward. Again, if members have comments on drafting, please pass those to João. And I'll just pause whether there's any additional points that members want to raise at this stage. Okay, so no flags raised on that. João, I think with that, is there anything else that you want from the board at this session?
No.
The introduction slide spoke about no or nominal leases. I don't know where that came in, or did I miss it? Next time. Okay, then I'll wait. Thanks.
Okay, thank you. So, João, anything else you're looking for?
No, just to thank you, the board, for this very helpful discussion. I think it sets in a very good place staff and task force work for the September meeting, and I'm looking forward to see you again in September, hopefully physically in my home country in Portugal. Thank you.
Absolutely. I think there's a number of people who are relying on you for tours of various different places, João, in Portugal. But no, once again, thank you very much to you, João, but also to the task force for working through a lot of very complex material. And I think this morning's session has shown us how not only is this a tricky issue conceptually, but it's a tricky issue practically in terms of how we weave this in, not only with our existing literature, but also how we weave this in with our developing literature. So thanks very, very much, everyone. Great teamwork, and thank you very much for all the support. So with that, we move into the next item, which is reviewing the responses to ED78, property, plant and equipment. And I'm delighted to welcome Agostina to the table for the first time. Welcome. And Ross, first to you.
Yeah, I just wanted to, again, also welcome Agostina Iambi to the team. She joined us in March 2022, and this is her first time presenting to the board. You have her papers, and I think it'll be a great session, but I just wanted to give her a formal introduction. And I'm going to ask Agostina to just give a quick overview of herself before we get into the discussion today. Over to you, Agostina.
Thank you, Ross and Ian. So again, my name is Agostina Iambi. I joined recently. I'm excited to be here and be able to present to all of you in person and both virtually. My prior experience is at TD Bank. It's a big Canadian bank, so I focus on wholesale and complex accounting transactions and providing them the proper interpretation of IFRS. I'm excited to have made the switch to public sector. I find it interesting, and personally, I was passionate about it as a taxpayer in Canada. I think it's relevant how the money is spent, and I'm here today to discuss ED78, and hopefully it's a great session, and I'm able to address all your questions and concerns.
Great, thank you, Agostina. And I think without further ado, hand over to you to walk us through the paper analysing the responses and proposed way forward.
Thank you, Ian. So today I'll be discussing agenda item number 7. It's a detailed analysis of the responses that we received for ED78. I thought personally for myself, it was good to remind ourselves what the objective of ED78 was. I know there's a new members and I'm a new staff myself. The idea was to develop enhanced guidance, particularly for the measurement and recognition of heritage and infrastructure assets. So that's the purpose and the objective of ED78. I thought to just outline the next steps. Today we'll be discussing the review of the SMC responses. And the hope is that in September, we'll be developing the pronouncement and the approved pronouncement. The idea behind this is as we review the responses received from respondents, overall, there was support for ED78. There was no particular thing that was highlighted. I identified a public sector issue that requires further development of guidance. or information that IPSASB board had not previously considered. And this is why you are going to notice, as you had read my papers and we discussed this issue, that the recurring theme is that there was nothing new brought up to the attention of the board. There are 9 papers. The number seems large, but it's mainly because I broke them down by SMC, while SMC2 was broken down into 2 just for simplicity. And then we have an editorial paper for non-conceptual changes that were made across ED78 that were up by constituents' responses across SMCs. I'll pause now if there's any questions.
Okay, thank you for that overview, very helpful. Any points made? Right, Lucy.
Thank you, Chair. It's not actually a question, but comment that in our work program, the approval is set in December, not September. Thank you.
Ross, do you want to just pick that point up? Thanks, Lucy.
Yeah, I think depending on progress today, we'll review that tomorrow and whether we change that. So the board, the official approval on the work program is December. It'll be up to the board to decide if we might be able to pull that forward after today's debate.
I mean, it may well be because obviously there are interfaces with the measurement project and also the update of the conceptual framework, chapter 7. So I think where we may well end up is that it might be an approval in principle subject to final confirmation when we approve the other standards that there are no changes that are required. So that may well be the bridge that that we need, just that we can move it forward, but it's pending those the finalisation of those other pieces of guidance. Good. Okay. So with that, we move on to the first SMC paper.
Okay, so the first issue paper, agenda item 7.2.1 on pages 6 to 8, discusses SMC1. This asks constituents regarding the restructuring, where there was movement from the core text into the application guidance and the additional guidance that was developed for heritage infrastructure. Overall, respondents were supportive of the structure of ED78. 87% of respondents agree with the proposal. And as mentioned before, there was no public sector issue identified or new information that IPSASB has not previously considered. So staff recommends retaining such structure. Does the IPSASB agree with this recommendation?
Thank you very much, Agustina. So anybody disagree with the proposed retention? Yeah, Claudia.
Not disagree with the recommendation, but in the paper of this agenda item, there's also an analysis of response in paragraph 5D, where I think the analysis was misunderstood. The problem belongs to the scope. In the scope of the measurement standard, it says an entity that prepares and presents financial statements under the accrued basis of accounting shall apply this IPSAS in measuring assets. Then paragraph 3 say, except as specified in paragraph 4. In paragraph 4, there's no reference to this new IPSAS or to property, plant, and equipment. And it's unsure when we initial measure which standards apply. And that is the question, what was the response? If we are in the property, plant, and equipment measurement standard, not measurement, in the property, plant, and equipment that said initially measured, and then we describe as we initially measured. But when I go to the measurement standard, it is unclear that we shouldn't go for initial measurement at cost back to the measurement standard, that it's everything it's explained in the property, plant, and equipment. And that was confusing the respondents, yeah. And I think that it's one of the points you deleted now a paragraph, which comes later on, but still it's unclear which
initial measurement is relevant, because if I'm reading the scope of the measurement standard, I have to use also, in addition, the measurement standard.
Thanks for that. I mean, we do need to be clear exactly how, and then maybe there's a bit of circularity there. So my suggestion would be that staff work with Claudia to make sure that we have addressed constituents' comments on that. So thanks for that.
Thank you for that comment, Claudia, and we'll address it after together. Okay, for agenda item 7.2.2, we are looking to address SMC2, which provide a constituency option between measurement bases. So once a current value model is selected, the reporting entity can choose between either fair value or the current operational value. I know that's an item that is open for discussion. Right now, what I would like to focus on providing reporting entities the choice of measurement, as opposed to discussing what current operational value would be. 74 of respondents supported the proposal. Of ED 78, and staff did not notice an issue that would require further guidance to be developed. Overall, there was a support for having such a choice. Does the IPSASB agree with this recommendation?
Thank you, Agustina. So open for comments. Renee, I think you were first, and then Todd.
So I think this is the first time that we deal with the choice between fair value and current operational value. I agree that there's a choice. I am not convinced, or I think we should explore whether it's a free choice or whether it's a choice that's driven by an assessment of the circumstances surrounding the particular asset. Some respondents have actually made that comment. Should it be free, or should it be based on what the asset is held for, financial versus operational capacity? So I'm thinking we need to explore a bit more the rationale and how we want to deal with, is it a free choice, or do we want assets that are held for financial capacity to be at fair value and operational capacity? So I'm not sure we've had that conversation yet.
Dave, do you want to come back on that?
So in developing ED 78, there was a discussion where we originally proposed only having current operational value, and the board discussed adding fair value as an option. And the discussion there was that it would be a free choice. And what we tried to do was supplement that free choice by helping readers understand what they might want to consider in making that choice. So that's how the financial and operating capacity comes in. But we can definitely revisit to make sure that it's clear it's a free choice.
And it may well be that you've got, I mean, I think this is where tightening the two standards up together actually is helpful, because I think there's probably, if we get the cross references right, then there's guidance in 77 which would be relevant. And I think then therefore we just need to see if there's an additional cross reference or something like that that we make that will help constituents understand where they need to go to consider that, if that's okay. So I think if you can work offline with Renee just to make sure that we get that clear cross-reference. Todd.
I'm very much on the same point and very supportive of what Renee said. I do have a concern with it being a free choice, given the way that things are shaping up between fair value versus current operational value. And I don't think we want assets that are held for their operational, the operating capacity to be valued on a fair value basis. So I think we do have to reflect on this, and maybe it will be as we start shaping up further in measurement what we're doing in that current operational value area. But I am concerned at the free choice perspective. And I know we talk in the standard about, you know, we've got current operational value for operating purposes and fair value because of the financial. So it's a little bit soft at present in terms of directing people as to which basis is appropriate to use if you're taking that sort of current value type model. So I just want to support what Renee says and say I think we do need to reflect on this and potentially be a lot clearer about what we're expecting our constituents to do when it comes to a current value type model, which to choose in valuing particular assets.
Thanks, Todd. I mean, I think this is a tricky area, and we're not going to end up in a rules basis. We've also got principles for when you would apply fair value now in IPSAS 44. So I think it is a question of tightening up rather than actually changing, because ultimately this is going to come down to a choice either at entity or jurisdiction level, depending on how the measurement approach is enforced. So we need to be careful to get the right criteria referenced, but without turning it into a rules-based approach. And I think in a sense, the free choice was a sort of shorthand for that. You know, so we're going to have to be very, very careful we don't end up in a rules basis here. Ross, did you want to come in on that?
Yeah, I very much did, because I think I agree with both Renee and Todd's points, but I think it's how we address them that maybe concerns me. If we end up being very prescriptive on using one over the other, I would be a little concerned, because one level above that, there's already a choice where you can pick historical cost or current value. So being overly prescriptive below that would be troublesome, but I agree, I think, Todd, with where you're going, let's make sure we're clear on when we would expect current operational value or fair value. But I have to be clear as well, that would still be an accounting policy choice, because the entity will need to assess that. We won't have a rule saying this is this and that is that. They'll still have to make a judgment. So I think that's just the way I think IPSAS 3 works.
I mean, I think let's not have a backwards and forwards on this. I think we log it that this is a specific issue that needs to be dealt with. I mean, we have the generic guidance in measurement, and I think we need to make sure that we keep the generic guidance on choice in measurement. Then there's a question of if we get it right in measurement, we need an appropriate cross-reference from the standard based on 78 into the final guidance on measurement. So I think at this stage we log the point. I would rather that staff take it away and think about that in the context of the discussion that we just had. A small comment, Todd, because I don't want to get into the detail, because that will then just spiral out of control.
Yeah, I don't want to prolong this longer than it needs to, but it may be able to be achieved, through application, implementation guidance or whatever, but we need to convey in the standard that if you've got something that's being held for operational capacity and you decide, you make the choice that you're going to use fair value, which means you basically put 0 or some nominal amount in because you've adopted fair value and the market would suggest it's 0, that is not the right answer here. So I think we have to guard against that sort of outcome in this area. So that's my main concern that we need to address.
Okay, noted. Lindy, I think you're next.
Thank you. It's a little bit on this issue as well. Just looking at the location of the paragraph 26A. So it talks about there that you have a choice, but if you go to 29, it also talks about the choice. And I just think maybe we need to reconsider the location, because it talks about it in one spot and then again. Also in paragraph 29, it does say the primary objective for which the entity holds the asset guides their measurement basis. So we kind of have already touched on how you would choose it. So I just think, we need to, when looking at it again, just look at the location of those 2 paragraphs and the wording in there. Thanks.
Thanks, Lindy. I think that's helpful. So that will go in the instruction to staff on this. Okay. So other than that instruction, I think we're good to move on.
So I think in a way we have discussed SMC2 completely, since we have paper 7.2.2 and 7.2.3 together, unless other board members have a comment regarding that. Okay, so
Patricia.
My point is about 7.2.3. Yeah. Can I confirm my understanding? If an equipment is used for hand reserve in commercial terms, the equipment is held for financial capacity. Yeah. Okay. My question here is about the paragraph 26A, because in some situations I can have the same kind of PP&E, same class, in the same class, but measure in different way. When the entity choose the current operational value. Some equipment, for example, in a hospital, an entity has a hospital, and some equipment is held for hand service in commercial terms, and in other parts of the hospital is non-change, no exchange. Then I have some kind of equipment with different values in the same class. It's classified in the same class. I think these requirements in 26A doesn't work, because I can have the same equipment in the same class, but I can the entity can measure in different way. And one suggestion, I think the major countries are adopting and implementing IPSAS in this moment. And I think it's not easy to understand what is operational capacity and financial capacity. My suggestion is elaborate non-authoritative guidance for better understand for the countries what is the operational capacity, and for example, because in public sector entity, non-financial assets, when equipment is non-financial assets, it's for operational capacity for the private sector entity. But when I analyze in the from the perspective of public sector, I change the rationale. I think it's favor the understandability of the preparers of the. Thank you.
So can we just separate discussion of the first point, which is quite specific, from the much bigger issue that you've raised on the second? So Agustina, see you on the first point in terms of the categories.
So in regards to categories, when you decide the particular measurement basis, you have to select it for the whole class. I think if you have those different equipments that might be the same equipments, but you use them for different purposes, you could separate those classes as to apply the particular measurement and create those classes.
So there might be a need to just reflect on the wording here in terms of clarifying that point. Yeah. Okay. Now, in terms of operational and financial capacity, I think you've raised a much bigger issue there. And if you recall, there was included within the project brief for the limited scope update of the conceptual framework, there was actually a proposal there that we've not got onto, which is actually, it includes within that the inclusion of a new chapter within the conceptual framework on operating and financial capacity. So in terms of finalising this project, I don't think it would be proper to actually start developing a major piece of additional guidance within the scope of this project. I think there's then a separate conclusion that, you know, what you're saying is that actually we should, you're proposing that we proceed with that piece of work that we haven't done yet in relation to the conceptual framework. And I think that's a separate issue. Ross, I don't know whether you want to comment at this stage. I think that's something that staff should take away. I don't think it's necessary to do that at this stage, and indeed I don't think we should proceed with that at this stage as part of this project. Ross.
Yeah, I would agree. We can take it away and look at it, but I mean, I think it's beyond the scope of this project to fix what the framework says around this at this time.
Lynn, you wanted to come in on it?
So I was just wondering, without reopening that whole debate, and I haven't checked the drafting on this, but I do think is there value in making it clear that we're talking about the primary purpose? Because I was just reflecting on what Patricia was saying with the hospital, where you might have a private patient income generating wing of a hospital and the rest of the building is used for public services, but your primary reason for having the hospital is for its operational capacity. So is there something that would help if we started using words for introducing the word primary reason for holding something, just to help a little bit with our constituents in terms of what does that mean if I got to split my hospital into two assets because I've got this income generating wing, as a for example.
Ross, back on that.
Yeah, I think that would at least help. I don't know if Patricia agrees, but I think that would help with the intention. Again, it is principles based, so it's not rules. So just giving that indication might be enough for people to apply their judgment correctly.
Okay, so I think if we can take that specific point away for staff to consider, just in doing that, I think that it's important just to think about anywhere else where we've taken that sort of approach, not, you know, that we're consistent. And then I think, you know, again, the points on do we develop broader guidance on operating financial capacity, I think that's something that needs to come back, because that obviously has work plan implications, even although it was envisaged in the original project brief for the limited scope update. Okay, so move us on then to the next recommendation. Sorry. Oh, Mike.
Yeah, Ian, thank you very much. I have just a point on the additional characteristics. This is quite intensively discussed, but I totally agree on what is stated here. But I also looked into the basis conclusions, BC 16. I think it's worth to make it a little bit more clear that there are also other characteristics, not only the ones bearing challenges. From the current wording, it's a little bit complicated to understand this. So I would really make sure to state that are not all the characteristics, then it would be clearer from my side.
Okay, thanks, Mike. Okay. Okay.
Okay, so I think in a way we open SMC 3, agenda paper item 7.2.4. The recommendation from staff is to retain the characteristics of heritage asset as proposed in ED 78. Respondents suggested additional characteristics, but these were either previously considered by the board or did not present a distinguishing characteristics from other property plan equipment or complexities when applying the principles. Does the IPSASB agree with the recommendation?
Thank you, Christina. And I think that was one of the important developments when we were developing this draft guidance. Renee.
May seem an editorial change, but I'm not sure, so I'm going to go ahead and provide a comment. AG3, when we talk about distinguishing characteristics, they have restrictions on their use and also often on their disposal. So could we just add use and disposal to AG3A?
Sorry, I missed the end of your point there, Renee. Apologies.
Right now, it's drafted as they have restrictions on their use. If we could add and clarify that restrictions are often also on the disposal. So add the words and disposal. May seem editorial, but it's a question of principle.
Can I have guidance from staff on that? Because I think it's slightly more than editorial, but Dave.
I guess I'd say off the top of my head, I don't really have a problem with that, but I think it is beyond editorial. I don't think it was necessarily raised by respondents. So I think if we want to make that change, we'd either have to make sure the rest of the board agrees or we should bring that back in September.
I think it would be better to bring that back in September because I think it is beyond editorial. I can see the point that you're making, Renee. And I think that's not unreasonable, actually, because no, I can see the relevance of it. So I think if we ask staff to go away and consider that separately.
I don't know how many respondents raised it, but some did.
Okay, so I think we need to give that consideration and specific. I think we need a paper specifically on whether we make that change or not. Okay, so I think I've got Lucy, then Ajith, then Claudia.
Thank you, Chair. I actually support the recommendation, but I just think about the first characteristics wherein they have restrictions on their use. If you look at it, there could be, it may not be a distinguishing or unique characteristic to heritage asset. Examples are PPE whose use could be restricted or limited. Those acquired through grants, for instance, or donations, wherein some restrictions could be imposed by the grantor or the donor. So I think we just have to I don't know if there's a need for us to expound on the explanation on this, or to distinguish to tighten our stand that these characteristics that they have restrictions on their use is really unique to heritage assets because of those existence of also PPEs that where the use are also restricted. Some PPEs where the use would be also restricted. Thank you.
I think we have to be careful, Lisby, on this. We're writing principles rather than rules, and I think you're right that this is not exclusive, but these are indicators. And I think, therefore, if we start to elaborate, we're going to end up in a rules basis. So I think here we need to leave the wording as is at the moment, and I think we've got support for that. So I think we leave as is. Ajith, and then Claudia.
Thanks, Ian. I was wondering whether under the distinguishing characteristics of the heritage assets, whether we need to include the fact that they are normally unique, whether that need to be included here. Thank you.
Dave.
I guess maybe to provide a little more background on why staff kept the bar so high on adding or deleting to the characteristics is because the board spent a lot of time in developing these characteristics. These characteristics, in order to be added to distinguish heritage assets or infrastructure assets, was to drive an accounting difference. So it doesn't make a difference from whether they're PP&E or not. So that's where we really spent our time to focus. So that's why we kept the bar so high on making changes.
Yeah. So, and again, it does say typically, which is addresses, I think, Lucy's point as well. So I think you're right. We've already considered this, so I don't think we walk back on that decision at this stage. Claudia.
Even I can follow the work which was have done and review of the responses. I'm really struggling. Then the majority or more than the majority of the responses said they need some additional help, and we come at the end, we don't need any addition. So it seems maybe we didn't really understood what they ask for, maybe not some application guidance, maybe some illustrated guidance would be helpful. And when I remember to the meeting yesterday, when we get the information from the valuers that specified assets will be difficult to value in the public sector. And then we had this example yesterday when we have also an additional heritage assets. So I'm not sure we should just reflect on the information we received yesterday, maybe have a review on it if we need maybe a few additional guidance or illustrated guidance.
Ross, on that.
Yeah, thanks, Claudia. I think if there are developments in measurement that come up through the measurement discussions from yesterday that impact those, we'll carry those over. But I think what we're focusing on today is the additional guidance we're adding for under the PP&E standards to help with the issues the board identified in accounting for heritage and infrastructure in line with the principles in the standard. And on this issue, we are always asked for more and more and more. People want very clear rules to apply, but we have to respect the principles in the standard. And that's where the board got to the proposals. The characteristics that have been identified relate to specific accounting challenges that were identified earlier in the project. And we provided examples. And in those responses asking for more, when we looked at those, there were no suggestions that hadn't been considered or related to specific accounting problems in applying the principles in the standard, which is why we haven't gone further. So we'll never get responses back to us saying, yeah, it looks good. That's all the guidance we need. There always is that ask for more. So we have to put that filter on what's the problem we're trying to fix in applying these principles. And we didn't come to a different outcome when we looked at the responses from where the board landed when it put ED 78 out.
I mean, I think one thing that might be worth doing, just reflecting on your point, Claudia, is, and again, it's back to the discussion that we had yesterday, which is the nexus between accounting approaches and valuation guidance. And I think undoubtedly there are some questions about how you approach some of the valuation issues that you meet. And I think it might be worth actually just having a conversation with our colleagues from the valuation team to see if that's something that they can have a think about, because I know, well, David knows this. It's another small issue I asked him to look at about 20 years ago, and he's been working on it ever since then. David.
Yes, I think we could get some assistance certainly from RICS, the Royal Institution of Chartered Surveyors, because they do have a separate division that looks specifically at valuing art and everything else. And as Dave knows, he's got a copy of the report that we wrote, which was the valuers, me when I was at the Treasury, and also an academic from the University of Kingston, which actually is all about how you might go about valuing heritage. So, I mean, there may well be something that we could eventually do as non-authoritative, maybe even staff Q&A or something to, that could be there, but we'll need to look at it because it is a tricky issue. Some people would turn around, and I've heard this argument before, you can get an insurance valuation, where you can, but then that's usually much higher than the market value. And then you get, well, you have auctions. Yes, but it's not an open and orderly market. It's actually a very narrow market, and the price that's paid will be whoever wins the bidding war. So there are all sorts of issues that make it very difficult. I mean, then maybe we can do something around that.
Thanks, David. I think that would be very helpful. So I think if we can have a look at that, because I think it is those sort of practical issues, I think, which really come through. So if you can, through the measurement task force, just have a chat about that, and maybe just sort of give us an update, perhaps in the September meeting when we. Okay. It is always a tension that we face, but that may well be quite a good way through. Okay. Chris, you got your flag up.
Yes, thank you, Ian. I'm happy heritage issue has come up here now, and responding from the comments by Ross, I think it just shows us how important heritage is to us in the public sector. And the board actually understands that this is practically a public sector project. And we just have to be careful that we do not rush to merge heritage totally in our ED 78, even though we have AG3. As Ross mentioned, people would always want to ask for more information just because of the nature of heritage assets. It's not because people just want to delay matters. They just want to know. They want to have specific information on how to deal with heritage. In my jurisdiction, it's an important issue. Some academics have approached me to discuss accounting for heritage asset, and I've told them that the board is addressing this issue, and actually I've also put across some of the material that the board has given to me. Let them also brainstorm and let us and give us what should be acceptable. But my point is just that heritage asset is really, really, really unique. And we don't need to be, we shouldn't be in a hurry to conclude on this project. Let's give our constituents enough opportunity to explore. And just like David has mentioned, we need to do more work in collaboration with the experts to help us really deliver on an implementable standard. Thank you, Chair.
So Ross, back on that. I mean, I think overall though, Chris, this does come into, we will never be able to give everybody the answer to the detailed situations that they face. And we've actually had a lot of discussion, a lot of analysis went into distilling what we saw as the key characteristics, the key things that would give, particular issues on heritage, as opposed to the generality of property, plant and equipment. And that's why we ended up with this included in property, plant and equipment, because we wanted to underline to people, these are just specific types of property, plant and equipment. I think, as David has alluded to, there are pieces of guidance around which are not accounting literature per se, they're other practical pieces of guidance. And so, what we need to do is, I mean, if other people have got equivalents of the you know, the valuation guidance, which David worked on a long while ago with RICS, you know, and pieces of art, valuation, those kinds of things, there's no harm in those actually being made available from either the IPSASB website or possibly through the Pathways to Accrual portal, which is actually meant to be providing practical guidance for people. And it may well be that actually Pathways to Accrual is a better place for, you know, those sorts of practical guidance to be presented going forwards. So I think, you know, we're not precluding the fact that people can help in that way. I think with this, though, we have to cut off. Now, you know, that doesn't preclude the fact that, and one of the things that we will start to discuss in the context of the forum, is that as we've got a more complete suite of guidance, we're going to move into the phase where people then, we're then going to be looking for feedback through post-implementation reviews on how is this working in practice. So I think, you know, we give it, you know, we need to finalise this guidance now. We then need to give it a while for people to implement, and then we should come back and actually have a look as a board at what's going on in practice. And if people say there is a major gap in the principles at that stage, that's fine. We can look at that on its merits. But I think we have to guard against you know, trying to be over prescriptive at this stage. So Ross and Thomas, you've got flags up.
Yeah, so just to give the board some assurance, this is not a rush project whatsoever. The first discussion of heritage was back in September 2015. And we've been working on this consistently since, including a broad consultation paper that we got feedback on and used as input to develop the proposals in ED 78 that the board approved and put out for comment. And we've got strong support from our constituents to take those forward. So I do think let's be a little cautious in overreacting to one-off comments or reinventing the project 7 years into it. We owe our constituents solution to their issues, and I don't think a good response to them is adding another 2 years for a couple of issues. And as Ian said, there is a lot we can do outside the standards to help with these issues that's probably a lot more helpful than spending more time on the principles. One of the key decisions in ED 78 that I think we shouldn't forget is the heritage guidance we're adding is underneath the property, plant, and equipment guidance, and all of the principles in that standard apply. What we've added is help for constituents to understand the key accounting challenges and how to apply those principles. We've provided that guidance, and we've got really strong support for that. So I think there's more of a risk here to overthink in taking the responses forward on a project that's been ongoing for 7 years. So that's all I wanted to say.
Thanks, Ross, for that reminder. I hadn't realised it was quite as long as that, actually. Okay, Thomas, final word, and then I'm going to move us on.
Yeah, actually, I did want to go in the same direction because I wanted to remind the board that the CAG already in December 2016 in South Africa had a discussion on kind of could be financial statements be the solution to kind of the definitely existing public interest regarding heritage. And I think at that point already, and I think that was kind of even more clarified in later discussions, it was clear that financial statements can only be the answer for a certain group of heritage assets, where it fulfills the kind of definition of an asset and the recognition criteria. And I think these characteristics clarify that in a perfect way. Everything else, yes, there is an interest in getting information, but financial statements are not the right place for that.
Thanks, Thomas. So, I mean, I think it's been useful to revisit both the context and the comments that we've had. But I think, you know, we need, as Ross said, we've been working on this for 7 years now, and I think we need to get the guidance out there, allow people to use that and the non-authoritative pieces of guidance, and then to say, you know, how is it working in practice? And we are going to need to face that issue about we will have changed a lot of guidance over the recent years, and therefore, as more and more people are using the standards, that's going to be one of the issues that we will need to start in a more formalized way to start to collect feedback and then to analyze that feedback on their use in practice. Okay, so on that basis, I think if we're content then to move on to the next recommendation.
Thank you for that. So the next recommendation is in regards to infrastructure asset characteristics. Similarly, staff is recommending to retain the characteristics as proposed in ED 78. Staff noted that there was a ask for a definition. However, there was conclusions by the IPSASB previously that infrastructure asset is a subset of property, plant, and equipment, so a definition will be included. There was asked for clarifications in that sense, or definitions for what networks or systems are. However, defining those concepts does not change how you would apply the principles. So staff is recommending to retain those characteristics as included, and the IPSASB agree with that recommendation.
Thank you, Agustina. So open for comments. Patricia, I think you were just marginally ahead of Claudia there. It's a close run through.
Thank you. About the clarification on network and system, in my view, I think it's necessary because it is a characteristic that implies in complexity in accounting for. Maybe here it's not to distinguish network and system, but the question here is what is network and system? I think it's not in my view, I disagree with this point. And another question that I have is normally after consider the response, IPSASB explained by BCs how the responses was considered and what is the conclusion. And BCs was not changing. I think sometimes it's not necessary. It's also confirm some base of conclusions, but sometimes I think yes. For example, there is a comment about it to have one specific guidance for heritage assets. Maybe it's necessary to explain more or how the IPSASB considering previous meeting in what is the conclusion is no, it's continue here only in PP&E, but for example, some heritage assets may be classified as tangible assets too. I think it's necessary to explain to respond the participants because it's may seem that the IPSASB didn't listen the response. Thank you.
Thanks, Patricia. I mean, I think on your second point, you're right. I mean, there is a balance because we can't put in basis for conclusions responses to every single point. But I think, perhaps it's something for staff just to reflect on whether there are any somewhat, points that have been brought up a bit more by a number of different respondents, whether there's anything else that needs to be included in the basis for conclusions, just to acknowledge the reasons, why those have been rejected. Ross, perhaps you want to come in on that.
Yeah, I do. So yes, we can work on the BCs. This is the first discussion of responses. So the BCs aren't finished. The board has to have its discussions. So if you have specific thoughts that you want staff to capture through the analysis that you've picked up, pass them through. But there is a first important point that we agree on what the guidance is, and then we finalize the board's thinking. So I would be more surprised if the BCs were completely finalized at this stage because we haven't had the discussion. So that's the purpose for today. And I would also just, again, caution against being overreactive to one or two negative comments when we have such a strong response overall. So we do have to be balanced, I think, Dean's point, but we'll get there in the end. But if you have strong views on any of the points, pass them along. We're happy to have a discussion between now and the next meeting.
I mean, on your first point on network and systems, I think, there is quite a lot of discussion already, and I'm reflecting on what's there in basis conclusions. I'm reflecting on, what we have in terms of the IGs. And I think when we discussed this first time round, these are not capable of definition. That's the problem. So I think that's why we went to implementation guidance. I think that's the challenge, that we're trying to write principles rather than rules. So I don't think we can go further without starting to move into rules basis. Agustina, you wanted to come in on that.
Yes, I just wanted to discuss, and thank you for your comment, Patricia, regarding the definition of networks and systems. One of the reasons as to think of not defining it is similar to not defining heritage or infrastructure. At the end, when you're applying ED 78 or property, plant, and equipment, your conclusion will be the same. And whether that asset is infrastructure or heritage, it doesn't change the principles to be applied. And that was the thought, that what would a definition change when you're applying the principles.
Okay, thank you. So I think I had Claudia next and then Abdullah.
Thank you. I would just, maybe it's the problem that we sometimes didn't know when it's relevant, we need a definition, and when it's just a description. I'm wondering, we requested for heritage assets, and I'm not sure also for infrastructure, some additional disclosures. If we haven't a definition for that, is there a risk that we don't have the right disclosures, or if we don't have this risk? I think that's more or less my point, if we need a definition or not.
Ross, do you want to pick that one up?
Well, just to remind that when we had this debate in ED 78 and whether we needed that or not, it was agreed that heritage and infrastructure are subsets of PP&E. So because the accounting is the same as general PP&E, we couldn't define them because we wouldn't actually have different requirements for recognition and measurement. We think the description adequately describes heritage so that you can apply the heritage-related specific disclosures without defining it. And we did have significant challenges in coming up with the definition the board could agree to. So, I mean, kind of well worth discussing if you want offline, but I don't think we're going to get very far or make much progress that's going to help anybody by defining it or not.
I mean, particularly where this came up as a problem was we've got the disclosures on unrecognised heritage, and there was the question as to whether that went in authoritative or application guidance. And I think probably we have to accept that we've probably gone as far as we can at this stage. And actually what we do need to do, given the overall approach of this is all part of property, plant and equipment, I think we have to let people go out and actually use this guidance. I mean, infrastructure, you're right, has particular problems, and one of the particular problems is actually just the broad range of types of assets that are covered. Rail, power, water, roads, all of them have their own practical problems. But I think that was always the challenge with this, that we were never going to be able to be sufficiently prescriptive for everybody. So again, I think they're probably, we need to give people some examples, and there are examples of guidance on all of those, but we're not going to be able to incorporate them in our guidance at the moment. So I've got Abdullah and then Adrienne.
Well, thanks, Ian. And I will start from the last comment you made, that under infrastructure assets, we have a whole range of different assets, and looking at the two characteristics and having an and between them. So didn't just do it for me. I thought we had better characteristics in IPSAS 17, whereas they are immovable, specialized in nature. We might retain some of the characteristics in IPSAS 17. And it's a bit subjective to say they have long useful lives. I don't know. For me, they are under. Yeah. Thank you.
I mean, you know, we've gone round that debate before, I'm afraid, you know, because the approach, I mean, no, I mean, you know, what we've tried to do is we've said, look, these are all property, plant and equipment. So the overarching, what causes problems is this. You know, but I think we cannot be prescriptive. And as Ross says, we've been at this for a number of years already, and we're not going to get to, you know, I mean, I know personally, you know, I was responsible for the development of an entire code on accounting for roads. And you know, even then you don't answer all the questions. So I think we just have to accept that, you know, this is about where we can get to in a standard. So, you know, I think it's probably back to the analysis that Agostinho has done, that there's nothing that hasn't been already gone round in the board's debates. Ross.
Yeah, just a quick point, and maybe just to kind of help members who are newer to the board and weren't involved in the earlier debates, both heritage and infrastructure started as separate projects way back when. We spent a lot of time working through those issues, coming up with how we would create accounting standards, what they relate to, what we want to do in measurement. And where we ended up was actually IPSAS 17 has all the guidance that's needed. The problem is applying that guidance for those issues. That's why we have the guidance in the way it is. So again, the characteristics don't have to bind them in, but it did go to the main problems we collected related to infrastructure and heritage, that we could add guidance to help in applying the IPSAS 17 guidance. And the positive thing I would take away from the responses is not the additional guidance or clarification, is the fact that nobody said that that approach and putting the guidance in IPSAS 17 isn't the right approach. Because considering these started as separate projects, it means the board is taking the right approach. Giving that clarity on how to apply IPSAS 17 is a better approach than trying to write reams of guidance about things that are already covered in an existing standard. That was a risk when we went out with ED 78. So, you know, looking for the positive in the response analysis, got support to take through the main decision the board decided that the guidance needs to go in 17 to help apply the standard. Or sorry, updated 17.
I mean, I think we have also, you know, when I look at it, you know, I'm just looking at, we've got quite a lot of implementation guidance, which wasn't there before. And that was very much directed at actually giving people practical guidance without changing the principles. So I think, you know, we're going to have to let people actually have a go at this and then say, is there anything that's actually coming out that really we as the standard setter could actually do generically internationally, as opposed to practical implementation guidance, which is going to have to be developed on different classes. Hervé, Adrienne. I think you're on mute.
Okay, now I'm not on mute, okay. So I don't want to go back to discussions that the board already had, which I'm not fully aware of, but well, I'm very comfortable with the recommendation. There's only one thing that I'm not comfortable with, and it comes to defining the distinguishing characteristics. I agree that if the characteristics are to be identified specifically, it's in that they differ from other PPAs, in that they add complexity to the application of the principles of in IPSAS 17. Okay, very comfortable with that. Also very comfortable with the overall picture that is provided by the respondents and the fact that we should not probably go further. But I'm not sure that we should probably go that far. in the first characteristics that they are networks or systems. If I refer to my own scientific studies, I would say that networks are included in systems. Networks are usually an array of things, of I would say assets that are of the same nature and that are connected to deliver a specific functional service. Systems are much different, and they're not very complex. I mean, networks are not complex. They do not add complexity to the application of the principles in IPSAS 17, whereas systems do, actually. Systems are arrays of different items that may be of different nature and same, that are connected or assembled to provide a specific functional service. I take the example of a railway network. Either you account for the network of rail tracks, which is very simple, they're all the same, or you add the rail stations, and then it becomes a system, and then it becomes complex and really complicated. So for me, the real distinguishing characteristic is that an infrastructure asset be a system and not really a network, where networks are just the same as the different items that compose the network itself.
I'm not sure I would agree with you on your characterization, having worked on the evaluation of both water and roads networks. I think the engineers would beg to differ, and I think that's probably where at the moment we just need to guard against sort of, I think changing things, even if we have a personal preference in terms of a terminology. So I think, understand your view. My view would be different. And actually, I think those differences just illustrate why we shouldn't actually change something that essentially we've got support for at the moment. I think that just shows why we've had so much difficulty with this to date. So I think, that's why we just need to be really, really careful before we move anything further. So I've got Lynn, then Mary, then Thomas.
Thanks, Ian. I did chuckle when you mentioned the highways infrastructure project, because I think it was a board that I was chairing that decided not to implement the code after all of that, because it was all far too difficult. But that wasn't the point I was going to make. The point...
Remind me about that over lunch, Lynn, anyway.
The point I was going to make is this discussion today and the responses, it just occurs to me that there is still a slight expectation gap that we need to make sure we communicate to fill. And what I mean by that is that we spent a lot of time looking at heritage and infrastructure, and we spent a lot of time before we put ED 78 out, where we added various bits of guidance. I think some of our constituents expected us to do a lot more, and that does slightly come through in the responses. So being careful how we communicate the end result, I think, is important. And I think it's important from two perspectives. I think we do need to signpost what guidance is out there to help people in practice, and what guidance we might put in place to help people further in practice. But I think we should guard against raising expectations that we will return to this. We have spent a lot of time on it, from a standards perspective only, if we're just talking about standards and not all of the other staff Q&A and non-authoritative guidance. From a authoritative guidance point of view, I can't see us coming back to this, and we shouldn't raise an expectation that we will.
Thanks, and I think those are all fair points. And I think if we leave staff to reflect on how we're going to communicate in various different mechanisms, I think that would be helpful. Okay, Mary, you're next, and then to Thomas.
I'm so sorry to back to the different view from Ian. And so the network and the definition, in case of infrastructure, the definition of the system and network should be clearly defined. Maybe the AG6, the electricity power system and road networks, water systems, it is so easily understood, can be understood. However, the another networks and systems will be exist. For example, the port. In case of port has so many should be contained in so many elements, and so that will be regarded as a network or the systems. So the maybe examples should be included, I think. Thank you.
I mean, I think the challenge we've got is that what we've decided to refer to in AG6 are only examples, and so they're not definitive. And I think that's the difference in terms of, because I entirely sympathise with the examples you raised there could be. Equally, they actually comprise quite a lot of different assets, some of which are separable, some of which are not. And I think that's the challenge that we have. So the idea is this just gives you an idea of what you're dealing with, but it comes back to the fact that the overall standard on property, plant and equipment deals with the challenges, and we give guidance on the principles or the sorts of characteristics that would provide difficulties in practice. So I think that's why we're not defining deliberately, because it's actually impossible to define these terms in a way that would work from both an accounting and an engineering perspective, and then be translatable. We're not going to be able to do that. So I think that's why we just have to be very careful that this is just examples include, which doesn't preclude the sorts of things that you were talking about there. It's just, it's trying to give people a flavour rather than to say definitively these are. Thomas.
In supporting what you just said, Ian, just remind the board of kind of what were your purpose when you kind of talked about kind of describing characteristics. The CAG discussed this topic in the June 2020 meeting, and I think there was one quote which probably describes it best. If we are not talking about a different form of accounting, don't get too hung up on the characteristics. I think what you want to kind of identify is kind of those characteristics which are troublesome, in order to develop targeted guidance on the application of the principles of IPSAS 17. That's everything we want to do. And therefore, I think it's not kind of really fruitful to kind of get too hung up on the characteristics.
So I think, we can always come up with additional examples and so on, but it's trying to actually close this down now in a way that actually gives people exactly what Thomas has just alluded to. So I think, again, that comes back to the approach that staff have taken in terms of, does this actually raise anything that we haven't already discussed across those very exhaustive discussions? And so the answer to that was no. We have been around all of these things before, and we came to the conclusions that we did, and we received the advice from the CAG that we did. So I think the proposal is that we do proceed on the basis of the recommendation, but I think the points that have been raised by both Lynn and Patricia are very important in terms of, firstly, the expectation rightly or wrongly, we need to address how we deal with that. And also, I think to Patricia's point in taking the BCs forward after this meeting, we need to make sure that we've adequately communicated the process that staff has been through on our behalf in terms of consideration of the points and you know, how the sort of more frequently occurring points have actually been assessed and dealt with, because we don't want to discourage feedback. Okay, so if we can move on to the next recommendation, please, Agustina.
Thank you, Ian. So the next agenda paper is 7.2.6, which discusses SMC5, disclosure for unrecognized heritage assets. Staff is recommending to retain the scope of that disclosure. This is specific to heritage items that have not been recognized because there's measurement challenges due to reliability of the measurement. Does the IPSASB agree with the recommendation?
Okay, so I'm conscious actually that I should have broken us for the next coffee break at that point in time. So I think I will leave people to reflect on that, and we will come back at 10 to the hour. Thank you very much, everyone. Okay, welcome back, everyone. So we move on with the item. Agustina had just introduced SMC5. So I'm now opening up for comments from members. Oh yes, sorry, Agustina, go ahead.
Thank you, Ian. I just wanted to add that on agenda item 7.2.6, we do noted that some respondents wanted to expand the scope to include infrastructure assets. Staffs consider that the issue there is more related to IPSAS 33 as opposed to ED 78. So we are planning to look into that later, and those comments letters will be taken into account. Back to you, Ian. Thank you.
Okay, thanks for that. Okay, any comments then? Not seeing any flags raised. So I think we're happy with that recommendation. Okay.
Thank you, Ian. So the next agenda item is 7.2.7, which discusses SMC6, specifically the non-authoritative guidance for heritage assets. Constituents were asked whether there was a need for, if they agree with that guidance included, and if they're not, what were the changes that they will recommend. 93% of respondents supported what was proposed for the non-authoritative guidance. The responses received for additional guidance. There was no public sector specific issue that required further guidance as per staff view. Or information that had not previously considered by the board in prior meetings since this topic has been open. So the staff recommendation is to retain the non-authoritative guidance for heritage as is proposed in ED 78. Does IPSASB agree with this recommendation? Thank you.
Thank you, Agustina. And I think very encouraging the level of support that we received here. Any comments from members on that recommendation? David.
Thanks, Ian. I would just add, subject to the earlier discussions that we had, where the task force, measurement task force, will be looking at what we might provide elsewhere.
Okay, thanks. And I think again that comes into the earlier comments made in terms of making sure that we reflect how we've processed comments and how we've dealt with them. Mike.
Yeah, thank you, Ian. I largely agree to the recommendations, but however, for that agenda item and for the next agenda item, there is a respondent under other recommendations who responds on AG8 to AG15. And when we read the guidance, we had the same feeling that to a very large extent the conceptual framework is reiterated. And given that, I would propose, in order to, let's say, tighten the standard, streamlining it, and let's say making our addressees, our stakeholders a bit more aware for the frameworks, then to replace that part of the text by a reference to the framework. So my suggestion would be to, let's say, review guidance 8 to 15 and maybe shorten it a little bit by, let's say, replacing it with a reference to the framework.
Thank you, Mike. Agustina.
Yes, thank you for that comment. So I think the reason why that guidance was added was the board discussed that there was a need from a prior respondent, and then that additional guidance that was included, and therefore my thought was not to remove something that addressed a prior concern brought up during the consultation paper.
Thanks, Agustina. Although I think there is a broader point which sort of sits behind Mike's point, which is that we've got a timing issue here as well around the changes that we've proposed to the definition of assets. in the framework. So I think we just need to think that through, because likely we won't have finalised that by the time we want to finalise this guidance. So I think we just need to make sure we've actually addressed that point. So there may well be some sort of consequential amendment or something coming through here. Okay, so I think, you know, that was the reasoning in terms of the original point, but I think there is that additional point here to take away. Okay, so I think we're content with the recommendation.
Thank you, Ian. So agenda item 7.2.8 relates to a similar SMC, but now in regards to infrastructure assets. And the question was whether constituents agree with the non-authoritative guidance included regarding infrastructure assets. This again was highly supported. There's 90% support for it. And the staff is recommending to IPSASB to retain the guidance as it is, the non-authoritative guidance. Does IPSASB agree with the recommendation?
Thank you very much. Tremendously encouraging, the very, very high level of support on this one. Any comments in relation to the recommendation to retain? Okay, that's good. So we accept staff recommendation on that.
Thank you. And then the last paper is agenda item 7.2.9, and this is the one where there were editorial changes made across ED 78 regarding comments made by respondents, which were not considered non-conceptual concerns, and they were revised. Does IPSASB agree with this recommendation? If there's any changes to that you would like to suggest, I'm happy to work with you offline if there's a particular editorial change that you would like to make as to how it's written or the revisions. Thank you.
Okay, thank you, Agustina. So any comments of principle on the recommendations that we have there? Lindy.
Thank you very much. I actually don't think that the deletion of paragraph 13 is an editorial deletion. I think it's quite a fundamental change in our approach, because we took a decision to say that the measurement standard would deal with guidance on initial recognition, and now we're taking the reference out in ED 78, which is kind of the biggest asset standard. So I think it's bigger than just an editorial. I think it's actually going back on a decision that we made. So I can understand that constituents might have been confused with the messaging and saying we're going back and forth, but I think we then need to just make sure that we know we're making this decision not lightly. And perhaps it's part of the revision that Claudia also raised earlier to look at.
Agustina, do you want to respond to that?
Yes, the thought to remove it was because on ED 77, there is a discussion and a basis for conclusion that the particular IPSAS will handle the initial measurement. So then having this particular paragraph confuse constituents as to what they will have to use, either EDA 78 or ED 77. I get your point that you're saying it's not editorial in nature. Maybe it will require a particular paper in itself, and I'm happy to bring that forward to September if that's the case.
I mean, I think it's in the same camp as the point that Claudia made earlier, which is actually we put it together, as Lindy pointed out, with a particular philosophy in terms of how you would use the two sets of guidance. And I think we always recognised in moving forward that there was going to be a challenge in terms of making sure that people understood where to look for the guidance. And I think what we need to do is just actually put those two together so that we're consistent then in terms of how the philosophy actually works. Now, obviously, we've had comments on ED 77 as well. So I think probably that's something where if you can work with the measurement task force, and staff, just so that we come back. And I think you're right, we do need just one paper that just says, here's how we've reconciled those changes. And probably in terms of testing those, my suggestion would be that you work with both Lindy and Claudia to make sure that they're content, as a proxy for the any further concerns the board might express.
Just to add to that, sorry.
Yes, go ahead, Lindy.
I think we also, as consequential amendments, might have removed the initial measurement paragraph of 16 and all of the other standards. So we just need to check as well. Whatever we do, there's consequentials across more than just the standard. Thanks.
Thanks, Lindy. I think it shows the broad-ranging nature of what we're doing here. I was looking at Anthony. I remember Anthony making a comment to me, I think probably in this very room a number of years ago, about, wow, this is massive. I think it's we're now drawing the threads together, but we need to make sure that we have followed through in that way. So thanks, Lindy, for pointing that out. Any other points members want to raise? Okay, so I think thanks very much for bringing those papers and for doing the analysis. Lucy.
Yeah, Chair, I just want to request the staff to look into to reconcile the paragraph 37, wherein we mentioned that electricity transmission network is one class of PPE. And then in AG 6, we said that it is part of infra. Although it was electricity power system, power network, but we say something about transmission there. So just reconcile the two. Thank you.
Okay, thanks, Lucy. Content to take that one away. Well,
She's talking about AG 16, right?
Okay, so staff will take that one away and just work with you to ensure we clear that. Okay, so I think we've had a couple of very good sessions today. In terms of, Ross, do you want to just... Okay, so in terms of the session on measurement yesterday, we have the remaining substantive paper on the income approach, which we do want to bring back tomorrow. Obviously, we've concluded on ED 78 today. So in terms of the running order for tomorrow, just to confirm the running order in terms of the agenda for tomorrow, we have the update from the IFAC Chief Executive, Kevin Dancy. First, we will move into the Public Sector Standards Assessors Forum next. Then we will bring back the income approach from ED 77, and then we'll move into the Programme and Technical Directors Report. So that's the running order for tomorrow's session. Now, Ross, over to you.
Yeah, just wanted to say in advance of Kevin Dancy speaking to the board tomorrow, I will be providing his 2 slides he's asked to be distributed that set out a few things related to IFAC strategy and its work related to public sector. And he's inviting along to observe a number of colleagues from IFAC who are working in the adoption implementation space and working to help with the adoption of standards. So I guess maybe my pitch to board members and technical advisors to think about the questions that those materials present and try and have some questions ready for Kevin tomorrow and take advantage of having his time while he's here. So just a prompt to members on that. Should be a great discussion. Thanks.
Yeah, thanks, Ross. I think there's a lot of good things going on in terms of adoption and implementation within IFAC at the moment, and certainly public sector adoption and implementation is very high profile. So I think really do take advantage of that to quiz Kevin and indeed any of the staff that are here on what's going on, thoughts, questions, suggestions, etc. All welcome, but you know, the public sector is high profile at the moment. So you know, we need to make the most of that opportunity. Claudia, you wanted to comment?
Just one question. The presentation is online already on our meeting details?
No, Leah will be sending it out later today, and you'll have printed copies available for those in the room tomorrow morning. So you'll have it probably later this afternoon. It'll come to your inbox.
Okay, so with that, we're going to close today's session, give you back almost an hour, which I'm sure will be welcome. Looking at Leah, I think the food is actually already available for you outside. With that, just thank you both to staff and to members for a couple of very good sessions. We covered a lot of ground, a lot of good points made, and look forward to seeing you again tomorrow. Thank you.